This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. 2 days in a row.
Wow, the whole gang.
Complete team. Yep. Does that mean everyone's taking off? Are you off Friday again?
Off Friday. It just happens that way, Tom. I don't know how. I don't know what goes on there. It's a Jersey Shore thing. You just gotta be. It's
a Jersey thing. Yeah. I think we got to play Bon Jovi.
It's in the contract.
Let's get Sweeney to a Friday. We say good morning here as we go into economic data. PPI are in 90 minutes. CPI retail sales. I mean, do you do a Thursday retail sales adjustment off negative sales statistics at Home Depot?
Yeah, Home Depot. I mean, I was just reading the note here, and the CFO is saying people, that might need financing for some projects, they're just deferring, waiting for rates to come down. They think that maybe they can, do that addition 6 months from now, maybe with lower interest rates.
Can I suggest that sort of like if you have negative sales, it's time to prune, to cost cut?
Right.
And all that.
I defer to John Tucker and all that stuff. He's the do-it-yourself guy.
Yeah, he is. He's unlike us.
Yes. We have people.
Well, I don't know if we have people or not, but certainly we don't have the skills. John Tucker, actually, folks, gifted in the wood shop. Red and green on the screen right now, the VIX 20.70. We say good morning on Android Auto, on Apple CarPlay, with over 20 nations involved there worldwide on Apple CarPlay. And we are just humbled by YouTube. Subscribe
to
YouTube
Bloomberg
data
yesterday. Some pretty solid
the data
numbers.
it's huge.
Wow.
And Ray YouTube told me it's international.
Okay.
Like I'm an ugly American, and I don't understand. It's not about a building in California making it go for America. It's like massively global. Good evening, I should say. On the Pacific Rim, we're featuring Kuala Lumpur today.
Love Kuala Lumpur.
Spent a couple hours there.
Did you?
Yeah, a little, is on my way. The tuxedos they wore in Air Malaysia were something.
Fantastic.
They were, you don't see that
That's
on
the way
Delta.
to fly. No.
You don't see that on Delta Airlines. From the Interactive Broker Studios of Bloomberg Business Flash, Miss Mateo.
You got it. And futures are mixed this morning. Investors kind of waiting that U.S. price data for any clues on the Fed's policy path. Also, rising tension in the Middle East weighing on risk. So we have NASDAQ futures up about 0.1%, 25 points. Dow futures down 0.1%, 71 points. S&P futures little changed, up about 5 points. So today, investors get the first of two key inflation reports. You said it, 8:30 a.m. Wall Street time. It's July reading on producer prices. Economists predicting a gain of 0.2%. Tomorrow, it's onto the U.S. Consumer Price Index for July. That's followed by July retail sales, the weekly report on initial jobless claims, also industrial production on Thursday. To the bond market we go. The 2-year yield, 4.01%. That's little change. The yield on the 10-year, 3.90%. And that is little change. To earnings, you talked about it. Home Depot down more than 3%. Cut its sales outlook. Weak housing demand. The retailer says those high interest rates, inflation, pushing consumers to hold off on buying homes or even looking into those bigger renovations that need financing. Checking in with Lowe's right now. They're down about 2%. Thursday, we'll hear from Walmart. To tech, China's Huawei Technologies close to introducing a new chip for artificial intelligence use, overcoming U.S. sanctions, and sources telling the Wall Street Journal that the company told potential clients this new chip comparable to one from NVIDIA. So we have NVIDIA shares. Right now, they're up about 1%. And a big day for Google. It's its annual flagship Pixel smartphone launch. We have Google up about 0.3%. Apple, checking with them, they're up about 0.1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much for this entire half hour. David Rosenberg joins us from Toronto with Rosenberg Research. Long ago and far away, folks, a guy named Fargo was at Merrill Lynch with Rosenberg. And between the two of them, it was 2 required reads every week. And with Rosenberg, on page 3 or 4, it was a vertical column slicing and dicing inflation like no one on the street. Absolutely no one did it or does it like David Rosenberg. David, what is the character, the nature of our disinflation?
Well, inflation, like any other price, and of course inflation is a change in prices, not the level always going to be dictated by the shape of the demand and supply curves in the economy and how those curves are moving. So, what we're seeing happening, and especially in the labor market, is those demand and supply curves are moving in a decisive disinflationary pattern. And so that's what I'm looking at right now, just how these demand supply curves are shifting. And as I said,
Right.
they're shifting away towards lower wage inflation and price inflation in general.
Some people don't know where those curves are. Some people look at them as a simple Marshallian cross. What I'm going to suggest to you is that's not true, and that there are times where accelerative tendencies or convexity can move as supply moves or demand moves. Are we at a point where we get jump conditions and disinflation to a much lower set?
Well, the best way I can answer that is almost to paraphrase what G. Powell said at the podium after the last FOMC meeting. Where he said that recession is not the Fed's base case scenario. He's not concerned about a collapsing economy. But he talked incessantly about the widening slack that we're seeing in the labor market. And that's ultimately going to be one of the key elements behind any inflation or disinflation. So it's very interesting that while he remained a bit of a cheerleader for the economy, he's noting that they're getting more comfortable, getting more confident over the disinflation. But the emphasis on slack emerging in the labor market, to me, was very key. And I think that what he's really signaling here is that we are seeing, and whether it's because the productivity numbers have consistently come in
Right.
better than expected, and the immigration boom that supported population growth and the labor force participation rate, that we've had a shift in the supply curve, even as demand has hung in. Now, demand growth isn't what it was, say, 12, 24, 36 months ago with all the stimulus, but demand growth is holding in. But we have a situation where perhaps demand growth is running at, say, 2.5% on a trend. But what if that's bumping against a supply curve that's closer to 4%? So all of a sudden, what we view as real GDP growth, which is the proxy for aggregate demand, what looks like 2 to 2.5% today, benchmarked against what the supply curve is doing in the economy, is almost what zero was, say, 10, 20, or 30 years ago. So that's really what's important here, is that we're seeing a widening gap between the growth in aggregate demand benchmarked against aggregate supply.
Right.
And that's why, without a recession, you've had core inflation. For all the talk about sticky, core inflation's come down in the past 12 months by 150 basis points.
David, Paul Sweeney, we're at 7:08 a.m. Wall Street time, and our heads are breaking over price theory with David Rosenberg. But the answer is, all of the foreign affairs article on China, there's a lot of supply out there.
There's a lot
and maybe that's what's bringing the prices down.
A lot of supply out there. David, what's the labor market telling us about this economy here? I mean, the market really got freaked out a week ago Friday about some of those labor data.
Well, I don't think that, the stock market as a standalone number should have freaked out. I was not surprised by the reaction in the Treasury market. Was not surprised that 10-year yields on that day closed just below 4%, and we were down about at least 10 basis points that day. I mean, that didn't surprise me because we saw a headline number below expected, downward revisions. The unemployment rate rose. Now you can debate as to whether or not that's a weather report or not. The BLS said that the hurricane had just a marginal impact, but you had widening slack in the labor market, and wage growth continued to recede. So this was just a smorgasbord of very benevolent events as far as the Treasury market was concerned. Was it a recessionary statistic? Although I'm still in the recession camp, it's been a long wait. But no, but it was certainly a disinflationary report. And that's what the bond market had to see. And you see, the thing is that the non-farm and household survey came out exactly 2 days after the FOMC meeting. Now, I would posit that if Jay Powell didn't concentrate so much of his attention on the other part of the dual mandate, which is the labor market, where he talked about that incessantly from the podium, then maybe the market reaction wouldn't have been so acute, especially in the bond market. but he told you
Right.
where his attention is shifting. And so that's what made the employment number so much more important. But it really reinforced his message that even without the economy
Right.
collapsing, we are seeing widening disinflationary slack emerge in the labor market, and that's all you really have to know.
Well, let's come back with David Rosenberg. I want to
Yep.
talk about Home Depot, what we see there with the revenue shortfall, which fits nicely into the Rosenberg belief. David Rosenberg, Rosenberg researcher, with us this entire half hour. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Just a chat is how billionaire Elon Musk described his sit-down interview with Donald Trump on his social media platform X. However, the live broadcast kicked off with problems. Technical issues delayed the interview for more than 40 minutes. Musk blamed a so-called denial of service attack, a kind of cyber attack that floods a server with traffic to force it offline.
This massive attack illustrates there's a lot of opposition to people just hearing what President Trump has to say.
Now, once the chat started, Trump says America's enemies don't find President Biden intimidating.
Iran would not be attacking, believe me. You know, when I was there, and I say it with respect, because I think we would have been good with Iran. I don't want to do anything bad to Iran, but they knew not to mess around.
Musk called for a government commission to ensure that taxpayer money is spent effectively and pitched himself for a role in that effort. Trump praised the idea, calling Musk the greatest cutter. The New York Times, seeing a poll, has Vice President Kamala Harris and running mate Governor Tim Walz with a 4-point edge in the battleground states of Michigan, Wisconsin, and Pennsylvania. The U.S. believes an Iranian attack against Israel has grown even more likely and may come as soon as this week. White House spokesman John Kirby says the U.S. and its allies have to be prepared for what could be a significant set of attacks. Bloomberg's Rosalind Matheson.
Well, that's right. It's interesting, in fact, because we're now, 2 weeks since the killing that Iran, blames on Israel of the Hamas leader in Tehran, and yet there's been no retaliation, even though every single day Iran has said we're going to have to retaliate.
Bloomberg's Rosalind Matheson. Ukraine's top military commander says his forces now control almost 390 square miles of Russia's neighboring Kursk region. Russian President Vladimir Putin promised a strong response. Global news 24 hours a day and whenever you want it. With the Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, 2,500 on gold. It's just as simple as that. There's something going on in the geopolitical winds. We've all been distracted by economics, finance, investment. $82.08 Brent as well.
Yep.
And there's just a certain tension out there.
There is. And so, we've seen this solid move higher in gold here. And again, Mike McGlone, Bloomberg Intelligence, has been pretty consistent on his global commodities call, which is pretty much buy gold and short everything else in the commodity space. But again, you called out Brent crude, Tom, $82 here. That seems to be that tight trading range we've seen for crude oil here, as the market was always discounting supply and demand.
Got the chart up in front of me. Going back to April, Brent crude from 92 down to 75. Right now at 82, perfectly on my long-term moving average. It's actually quite an elegant chart. See if it can break through and breach to a higher price. We'll be watching that. But again, gold, $2,503 per ounce. That's nice. So they sold.
And I'm going to call out Bitcoin just because I know you're interested in that. $58,700 on that.
They sold
crypto.
my mother's Krugerrands. From New York City, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a mixed open. This is after Asian stocks recoup their losses from last week's rout. So right now we have NASDAQ futures up 0.2%, 45 points. Dow futures, little change, down about 14 points. S&P futures up 0.1% or 9 points. We take you over to the bond market. The 2-year yield 4.00%. That's down 1 basis point. The yield on the 10-year 3.90%, and that is little change. Let's get to Japan's Nikkei right now, up nearly 3.5%. We have European stocks struggling for traction. We have the Stoxx 600 erased its early advanced travel and leisure shares, leading the declines. Stoxx 600 down about 0.1%. To currencies, the British pound gained after data showed UK unemployment unexpectedly fell in the second quarter. Right now, the British pound up about 0.1%, 127.89. We have the Japanese yen down 0.2% at 147.58 against the dollar. Companies making news. J&J, Johnson & Johnson, reportedly closer to settling those lawsuits filed by thousands of people who claim its baby powder gave them cancer. Sources are saying more than 3/4 of the plaintiffs signed off on a $6.5 billion settlement. We have J&J, their shares are little changed. And Avon Products filed for Chapter 11 bankruptcy. The beauty products company also facing a number of lawsuits, people claiming that the talc in its products cause cancer. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Paul Sweeney, Tom Keene, with us, David Rosenberg, for a generous half hour, of course, with Rosenberg Research. David, fold it into the stock market, which you do so well, and I want you to fold in the idea of nominal GDP comes in, because inflation comes in a Rosenberg fashion. Maybe real GDP's quiescent or solid or comes in, and all of a sudden, corporations are struggling for revenue growth, a la Home Depot. Is that our 2025?
Well, it probably is, because what was important about Home Depot wasn't what they said about their current sales, but it was the very weak guidance that they provided that was really, I think, the source of disappointment today. And it's following a string of companies, primarily in the consumer space, which are really struggling. And all the eyes, of course, are on technology and the generative AI wave. And technology, call it over 30% of the stock market, a much lower share of the economy. And what's important, I think, from I guess a macro perspective, taking the cue from the stock market, is that the only sector among the 11 S&P 500 sectors this year that's in the red is consumer discretionary, which may be less than 10% of the stock market capitalization. It doesn't get that much attention because everybody is just focused on the sex that's provided by the technology sector. But discretionary consumer spending is 40% of GDP. And so what the stock market is telling you, for all the naysayers out there about, because the recession hasn't come, therefore it's never going to come. But you have a disconnect between the components of the stock market, their shares, and the shares that actually are in the economy. So the consumer discretionary space being the only sector down, but the dominant force in domestic demand, I think is a red flag as far as the economic outlook is concerned.
So, David, how do you view the U.S. consumer? I mean, I guess it's hard to even say there is a common consumer out there. There seems to be many strata out there. How would you characterize, consumer demand out there?
Well, everybody's talking about the K-shaped economy, but you are even starting to see some of the strains emerge in the higher end. And the higher end has been held up because they're not as debt heavy as low and middle income households. They're not as debt heavy, therefore not as vulnerable to the interest rate shock of the past couple of years. And of course, they benefited from the wealth effect from what the stock market has given them. And now the stock market seems to be topping out. But in the end, recessions are caused by slight changes at the margin. And you're seeing those strains really emerge amongst low-income households, which spend 100% of their income. And I think actually, the biggest bombshell was what Brian Moynihan said on Face the Nation on Sunday. because, these bank CEOs, let's face it, they're normally a pretty cheery bunch. But he's talking about their sample size, of only 60 million consumer accounts,
Right.
and along with Wells Fargo, the other consumer bank. And he didn't just say that consumer spending is slowing. He said it's slowing sharply.
Okay.
And you have all these other economists, and I know they show up in your shows talking about, traffic at airports and traffic at restaurants and traffic at theme parks, everything's fine.
Right.
And that was laid to rest by Brian Moynihan, who said, yes, for sure, traffic is strong. But here's the problem, is that spending per person.
Yeah, I'll take that.
Down.
And I'll also...
by the way, traffic doesn't go into GDP.
Right, but David,
does.
to put a bow on this, and I want to get your market conviction here of what you're doing if you're not all in cash, but to Mr. Moynihan's point, revenue is price dynamics and unit dynamics. And so in the airline business, they're popping unit dynamics nicely, but the prediction here has to be a Rosenberg-like price drifts away. There's no pricing power, is there?
No pricing power. And there's obviously a bit of a disconnect. I've got to say, I'm not a conspiracy theorist, but the government data have been so far off the more anecdotal survey data, and of course what corporate executives have been saying. And what about the Beige Book? And I was actually heartened by the fact that at least Jay Powell gave some lip service to the Beige Book, which is the most comprehensive, albeit non-data, assessment of the U.S. economy that comes out every 6 weeks. And you're 100% right, Tom. Every single Beige Book this year, even during that temporary inflation blip caused by insurance costs beginning of the year that caused the Fed to sort of step back, every single Beige Book is talking about an ongoing loss of corporate pricing power. And of course, we talk about pricing power. It's not about levels, and the bond market does not respond to levels. It responds to change. And what's happening is that you see when the corporate sector were raising prices like it was nobody's business in 2021, 2022, nobody cared. Everybody was willing to accept the price increases in the consumer sector because we were flush with that $2 trillion of stimulus checks. But you see, all of a sudden, the stimulus checks are gone.
Right.
The savings rate at barely more than 3% is a fraction of the pre-COVID range of 7 to 8%. And all of a sudden, without the cash cushion, people see, look at these price levels. Now, the thing is that, and this is what I'm looking at, corporate profit margins are still in the top half of the historical range. So companies actually have the capacity to reduce their prices. I don't think we're going back to where we were 2 or 3 years ago.
Right.
But they have capacity to lower their prices in response to what's obviously a consumer revolt right now against these prices. And that, by the way, is when you build into a deflationary environment.
David, we're out of time.
I'm steadfastly bullish on the Treasury market.
Thank you. And we'll get the yield calls the next time around. A lot of people all of a sudden looking for Rosenberg-like yields. David Rosenberg, Rosenberg Research, can't say enough about his work. Honored that he was in my book couple years ago.
Sure. Yeah.
Please. We got to talk about this because to me, I folks, it's off the radar, but it's something Paul and I have lived, and we're in the thing. I was so honored to be in the show industry, and huge thank you for all the emails. It's a tawdry young show. It took me forever, Paul, to figure out how to get the show on my TV screen in the library. I mean, this is not like, mom sitting down watching Gunsmoke.
Right, no.
At 8:30 or 9 o'clock at night. Warner Brothers Discovery yesterday, breaking down to new lows.
Yeah, exactly. I mean, just
like
over
way
the last,
under 7.
Over the last 2 years, the stock has gone from $25, $26 a share to under $7 here. So, and by the way, folks, it's got just a huge balance sheet, a lot of debt on the balance sheet. It begs the question: something has to give here in terms of, I think, the ownership and the structure of this company. And John Maloney is a big shareholder, so maybe he'll be an agent of change there.
So I was trying to sign up for Max or HBO, ad or not ad free. Then all of a sudden I'm over to Amazon Prime. How is HBO and Max on Amazon? I don't get it.
I don't know. I don't know. I mean, they're just, everybody's putting product on each other's platforms. It seems.
Exactly.
So, yeah. So you're trying to, create a brand out there other than Netflix and maybe Disney. Where do you go?
The only way I knew it was Kit Harington is the HBO one, like at the beginning of Game of Thrones. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. Futures are mixed ahead of key economic data. About an hour from now, we'll get the July Producer Price Index tomorrow. On to July's Consumer Price Index, followed by retail sales on Thursday. So right now we have NASDAQ futures up 0.2%, 53 points. Dow futures little change, down 36 points. S&P futures up 0.1% or 9 points. We have the 2-year yield at 4.00%. That's down 1 basis point. The yield on the 10-year 3.89%, and that is little change. Commodities, Brent crude right now at $82 a barrel. The U.S. sees that Iranian attack against Israel is increasingly likely. We have WTI crude at $79 a barrel. Companies making news, that's General Motors. Sources saying it's laying off staff in China. It's also planning this larger structural overhaul of its operations down there. Now, shares are down more than 1%. And Samsung's largest union, well, they said they're going to go on strike from August 15th to 18th. Shares up nearly 1% in South Korea. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. That's a really nice setup to Seema Shah, who joins us right now. Seema Shah is with Principal Group. We're thrilled that she could join us this morning with a great perspective from London. Seema, I want to get to the flap at the moment, which is sort of the global wrap around the carry trade in Japan. But I want to bounce off what Lisa Mateo just said, which is people are considering layoffs. Are we just really setting ourselves up, a la Home Depot, a la Generous Motors and others, where companies are really going to start managing headcount? Is that what you feel in the air?
Hey, Tom. So, I mean, look, that is really important news if we start to hear more companies talking about layoffs, and it really is a concern. I would say that at the moment, though, I mean, I think what we've been hearing on the street and across the board is, yes, companies are revisiting their labor costs. It makes sense. You know, they're looking at higher refinancing costs, particularly with the funding wall coming up. And so as a result of that, they're looking at everything, and they have to, balance off any additional costs somewhere else. And the thing that they are looking at is appraising where on the labor cost side that they can pull back on. We haven't as yet seen layoffs, but we have seen snipping around at the edges, whether it's reduced hours, earnings, etc., but not quite the job layoffs at this point.
What sector do we watch to see that trend? The easy answer for Global Wall Street is the financial sector. But what sector would you pay attention to?
It's the financial sector, certainly, but it's really the consumer discretionary, because remember, that the consumer side has been the key driver for the broader US economy. If you're starting to see pullback on that area, well, then that really does start to question the strength, the resilience of the US economy. So that's a bit, I think, which would be the really concerning side. And certainly any areas which are really interest rate sensitive, the bits that will be more cyclical and would be, I guess, a bit more of an advance warning that there's economic pressures building.
So, Seema, given that, I guess, you think about a week ago Friday with that jobs data really kind of spooked the market, how do you think the Federal Reserve is kind of leaning at this point?
So, and I think this is the big question that everyone is thinking through. So I think similar to, I mean, the first thing to remember is that, just as we are absorbing the economic data as it comes out, that is exactly what the Fed is doing. But I don't think they have any additional information on top of what we do. But what we can see, and assuming that the inflation data today and tomorrow are fairly well behaved, it means that they can shift their focus points to the other side of their mandate. Now, we do think that they will have to err on the side of caution. Maybe think about front loading some of those rate cuts, whether that's back-to-back 25 basis point cuts. If you have a worse labor market report come the beginning of September, then certainly a 50 basis point move starts to come onto board. But the thing that you're seeing already is that Fed speakers are not all unanimous in the idea that the labor market is slowing and that inflation is under control. So I think there's a bit of consensus building that still needs to go on behind the scenes.
And Seema, we had the manufacturing, I know this is a services-driven economy here in the U.S., 70% or so, but the manufacturing economy's weak. We had some weak ISMs last week. What do you make of that?
Well, it's concerning. I mean, I think with the ISMs, for the last year or so, I would say that they haven't been the best indicator of what's actually going on, certainly in the hard data. So we want to take that with a pinch of salt. But this is the thing with the US economy, and I don't think anyone's in denial about this, is that there really are pockets of weakness. It's definitely not the point. I don't think anyone's making the point that the whole US economy is looking really strong. So I would say manufacturing, segments of housing, they're the areas where you are seeing weakness. And to your point before, services is the main driver. So that's a bit that if that starts to turn and starts to topple, then actually the picture for the US economy starts to really, really deteriorate. The manufacturing side is clearly slowing. I think that has come through in a number of bits of data.
So where do you have nominal GDP? I mean, we're sitting here this morning in New York, Seema, looking at Home Depot with not shocking, that's the wrong word, but abruptly negative same-store sales numbers. Is that just an indication that nominal GDP not only under 5%, but can begin to threaten a nominal GDP growth of 3.9%?
So what we're seeing in our forecasts as we get through to the second half of the year is that you see GDP slowing down towards that trend level, somewhere between the 1.7 to 2.2% on a real GDP basis. So I do think, I think the Home Depot is a concern because we do typically look at that as a bit of a forward-looking indicator of what is building up in terms of strains amongst consumers. So it's one thing that we do need to really focus on and take notice of that news story. But I think that we should be expecting that, look, the US economy isn't going to stay, it's not going to stay, not going to continue to accelerate. I would expect that Atlanta GDP now tracker to be coming down as the month and the quarter progresses. But I think a trend level for GDP for the second half of this year makes sense, with maybe a further slowdown at the beginning of next year before Fed cuts start to really come in and the second half of next year starts to look a little bit stronger.
So let me cut to the chase. What does the stock market do? If I've got trending, tepid, Seema Shah, like we're going to get through the year, is there a way that equities manage to be resilient or even improve in price?
I think that they do. So I think that there's actually a window, actually a fairly long window where equities can do okay. Now, for the first month or two, I think it is going to be challenging because the market is going to respond to every single bit of data. And inevitably, across any bit of data, there's going to be pockets which are weak. So that volatility and uncertainty continues. But I think the key thing is this: in terms of a recession outlook, even if there is a genuine economic slowdown coming through, given the resilience and the balance sheet strength of households and corporates, is it likely that the Fed can't come to save the US economy with various rate cuts? So actually I put the chance of recession fairly low, which means that after a bit of volatility and pullback, I think the equity market can still eke out some positive gains as we get through 2024 and into 2025.
That's our first bull of the week.
Yeah, there you go.
Seema Shah doing it.
Hey, Seema, I mean, we've been talking about a recession for 2, maybe 3 years now. When do we typically, how often do recessions typically happen, and aren't we overdue?
So, look, it depends whichever indicator you're looking at. But I mean, if you're thinking about what happens post-Fed tightening, around now is when you're meant to be in recession. So certainly with the SARM rule, with the jobs numbers, et cetera, maybe it all kind of falls together nicely that this is the time that we should be in recession. But if you look across the broader environment, we're not really seeing signs of that. The concern, of course, is always that once you see some layoffs, it becomes something which is self-reinforcing and it can unravel very, very quickly, which is why these news stories from companies announcing layoffs is really, really important. But as I said, as long as you have strong household and corporate balance sheets, then actually weakness in the labor market should not be able to mutate into that kind of hard landing.
Seema Shah, thank you so much. Principal Asset Management, their Chief Global Strategist. Greatly appreciate that. You get Rosenberg and Shah back to back.
Yeah, solid.
And it shows the nuances and the great guess, Paul, that's out there. And I don't mean the guest at Jackson Hole or even the guest at Labor Day in the jobs report, but where's my conviction for what I think stocks will be in October or January of next year? And I'm sort of like, I think for all of us, we're trying to make it up as we go.
Sure. I mean, you've got, presumably the Federal Reserve is going to be cutting interest rates maybe as soon as September. The earnings season, we're just kind of winding up here. It's been pretty solid. Forecasts from most companies are cautious, but why not be cautious? Because, again, there is that concern about a recession. But overall, the backdrop seems pretty solid for risk assets.
We got Michael Barr out on Instagram today.
No way.
It's
going social with the kids.
We're going social. It's on
the gram
with the Detroit Lions. He insisted we have the Detroit Lions Instagram feed. John Farrell sent me a note. What in God's name are you doing? That's the smartest note I've heard all day. With our news in New York City, Michael Barr.
Thanks, John. I thought we were tight. Former President Trump and billionaire Elon Musk talked about the assassination attempt and deportations during a chat on X plagued with technical glitches. The start of the chat was delayed for 40 minutes. Trump went on to say that he was going back to Butler, Pennsylvania, where his life was threatened.
We're going to go back in October. We're all set up, and the people are fantastic in Butler. It's a great area. These are incredible people.
Trump also commented on Musk saying, "I need somebody that has a lot of strength and courage and smarts." The FBI says it is investigating efforts to hack both the Harris and Trump campaigns. Bloomberg's Ed Baxter has the story.
The GOP says hackers attempted to get into Roger Stone, a former Trump advisor's account. The Harris campaign says some Harris staffers were targets. The Washington Post first reported the attempts. The Harris campaign itself says it does not appear to be a victim. It says the campaign vigilantly monitors and protects against cyber threats and that it is not aware of any security breaches. The Trump campaign hasn't responded directly. Ed Baxter, Bloomberg Radio.
President Biden and First Lady Dr. Jill Biden will attend a cancer moonshot event in New Orleans today. 2 years ago, the Biden administration relaunched the Cancer Moonshot Initiative with two main goals: one, to prevent 4 million cancer deaths by 2047, and to improve the experience of people touched by cancer. Last week, HHS awarded nearly $9 million to improve access to cancer screenings in underserved communities to further those goals. The U.S. believes an Iranian attack against Israel has grown even more likely. The White House says it may come as soon as this week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom Ball, Lisa.
Michael Barr, thanks so much. I think we got to talk about sports right now. We're going to do this twice in the show today.
Wow.
And that WCBS,
yes.
Venerable, John Tucker, I hope will join us later. He's got an incredible schedule.
I know.
I talked to his people and they said it was not possible.
Okay.
But they're going to become ESPN New York. And it's, Paul, I wanted to go to you on this. I'm sorry, sports on TV is all that's left.
Yep.
And is sports on radio all that's left?
I don't know. It's, in New York City, we've had the benefit of, just two straight up news stations, 10-10 wins in WCBS.
For about 60 years.
Yeah, for 60 some odd years, which maybe one could argue that's one too many. Do you need two news stations? But that's the way it's been in the world's, the U.S.'s largest market.
You're encyclopedic on Detroit. What do you see over there? Same thing.
It's the same thing. I mean, you have, in Detroit, you've got one major news station radio-wise, and then there's WJR, which is news talk.
Yep.
WWJ,
which is the all-news station. And yes, you see that landscape that's happening all over the place.
I mean, somebody said to me, what's this mean to you? And I remember as a kid, I had the Heathkit radio. Mm-hmm. And I would listen to KMOX, St. Louis Cardinals baseball.
Yeah, great station.
And one day, Rachel and I were in St. Louis with the St. Louis Fed. Wonderful time. Ate at Mike Schmidt's restaurant. And they interviewed me at KMOX. And I could barely get through the interview because of my childhood. And I think for younger people, Lisa has no idea what we're talking about here. I mean, this is foundational stuff.
I know we're running out of time, like you were saying about that, about sports and somebody. I remember Ernie Harwell, the great Tigers broadcaster, and he talked to me personally. Thank you, Michael, for participating in that bowling tournament. And I said, blah, 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 blah.
Michael Barr talking to us about radio. We'll have Jen Tucker in here with some encyclopedic knowledge of New York radio. We're proud to be part of it at Bloomberg 1130 each and every morning. And, of course, all we're doing on YouTube. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are mixed after Wall Street started the new week with signs of market indecision. Right now we have NASDAQ futures up 0.3%, 64 points. Dow futures, little change, but down 26 points. S&P futures up 0.2%, or 11 points. The two-year yield, 4.00%. That's down 1 basis point. We have the yield on the 10-year, 3.89%, and that is little changed. We have spot gold lower, $2,464 an ounce. Brent crude $81 a barrel. WTI crude $79 a barrel. Shares of Tesla down about 0.2%. This comes a day after Elon Musk sat down with Donald Trump for that conversation on X where he talked about the former president's supporters. He asked them to stop demonizing EVs. You have shares of Trump Media down about 3%. And how much did you tune into the Paris Olympics? Well, the games attracted an average audience of 30.6 million people per day. That was on Comcast's U.S. media outlets, an 82% increase from the Tokyo Games. That is your Bloomberg Business Flash. Tom and Paul.
Glad you bring that up, Lisa. Paul Sweeney, I guess the number was $1.2 billion to participate. Did net clean NBC make any money?
I don't know how the accounting goes, but I'll tell you what, they got plenty of value by promoting everything else that's across all the NBC platforms and all their various networks. I mean, they had 2 weeks to promote all their stuff for a long time. So at the end of the day, I think it's a net positive for Comcast.
It isn't it?
NBC
And, it's like other industries. It's not that they did it, but everybody else evaporated for 2 weeks.
Exactly.
You didn't see.
No, they owned
they own the zeitgeist.
They owned the zeitgeist for 2 weeks, and again, they sold a ton of advertising, and they got a lot of promotion value.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily front pages, the Lisa Mateo Hour, is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. There are no ticket charges. There are no conflicts of your interests at ibkr.com/RIA. Lisa, what do you have?
All right, we've talked about how artificial intelligence, like a lot of college kids are taking courses in it, but it turns out a lot of older Americans, we're talking about seniors, they are starting to take classes in artificial intelligence. I mean, think about it. They've gone through a lot of transitions, right? You had the icebox to the refrigerator. You had radio to TV. They went through all these transitions.
So you think in my youth I had an icebox.
I didn't point to anyone.
I don't have a clear memory, but I have a memory of my mother waiting for the ice truck.
To
come down the street.
Okay, so you're in there. Yeah. All right. So
here's Barbara Winston. Yeah. I saw ice boxes turn into refrigerators. That is how long I've been around.
See?
But I think this is probably this being AI is the greatest technical revolution that I will see in my lifetime. That's saying something because Barbara Winston is 89 years old.
Exactly. And they're interested. I mean, think about it. Like, there are some things like these classes at senior centers now, it could help them because it makes them easier to get things like medical appointments. Like AI can help you with that. But it's also teaching them about the other side of it, like being susceptible to misinformation, like deep fakes. And seniors are very susceptible.
Yeah, I think the scam thing is real. And on a social note, it's percolating with Zelle. The banks, the government's looking at the banks, as they should be. It's, I think, not the bank's fault, but the fact is all this new technology leads to people be careful out there.
Yep.
Most definitely.
I get stuff all the time.
All the time, yeah.
It used to be simple. It was a letter from Nigeria, and you could tell it was from Nigeria. It's not as simple as that anymore.
No, you get them on your phone, too. You get these weird text messages.
Kids get them. What's
crazy.
This? Next.
It's crazy. We were just talking about the Olympics, right? But you remember what was missing from this year's Olympics was baseball, right? And softball, have to point that out.
Okay.
But it's coming back in 2028, right? It's in Los Angeles. So MLB players want to play, but as you know, the league doesn't let them. So it's kind of this back and forth about what's going on. So they never really allowed them. One thing, it coincides with their season. So they would have to shut down, right? I mean, but players want to play. You have Shohei Ohtani. He told Sports Illustrated he wants to play. Bryce Harper's been fighting for it. Aaron Judge says it would be a dream to play in the Olympics. But could that shut down, what could that mean? I mean, they're already cramming, you think, 162 games into 180 days. If they prolong it, hockey tried it,
Winter
yes.
Olympics.
They went for about 2 weeks, they went dark.
And people got injured.
And that's the other thing, injuries. That's the other thing. I mean, and then if you, let's say you postpone it, you extend the season, then you're competing with the NFL.
You two are way more into this than I am. Did we lose break dancing after the Paris Olympics?
Boy, I think that might have
Is
had
that
its
decision been
flash in the
made
pan
yet?
there.
You didn't like it?
Oh, Snoop was up in the stands nodding off. He was so bored. What else do you have this one?
This one's interesting. The San Francisco Fed says middle, low-income Americans.
Hold on a minute. We got a problem. Excuse me. You got to tell Ari on YouTube when we talk about baseball, we lead with the Red Sox. We need images, even if it's about Los Angeles. We show the Red Sox first. Okay, next.
New rule. Okay. San Francisco Fed survey, middle and low-income Americans, they're running out of disposable cash. But they're on track to have less than they were on pace before the pandemic. So here's what that survey showed. Just to break down the numbers, the top 20% of households by income, they saw their liquid assets. So we're talking about things like cash and funds and savings, checking, money market accounts. They rose sharply in 2020, early 2021, but then they dropped. They're now about 2% below what would have been about the pandemic's impact. So it's even worse for those households that represent the lowest 80% by income. So it's just showing how much they have as far as cash.
I can't say enough. I'm so glad you did this. I can't say enough about this, folks. I follow and there's people that keep this. The percent of Americans living paycheck to paycheck, to me, is a social statement. And it's shocking. I mean, it's just
and you're seeing it in some of the earnings numbers we've heard from a lot of the consumer companies. From the fast food companies all the way across the board. Okay.
Yeah, most definitely. And then this is the last one, a music one. Okay, we've been talking about vinyl all the time. Everybody's going into vinyl.
Killing me.
But now it's about audio cassettes. That's what the kids are doing.
Saw this.
Gen
Are
Z.
you kidding me?
Yes, they are listening to audio cassettes. The reason why you have a lot of these stars, they're putting out their new music onto cassette, like the Musgraves, Taylor Swift, Olivia Rodrigo, Dua Lipa, Ariana Grande.
On cassettes.
On cassettes.
I want to listen to Vampire on cassettes.
Yes, because they're saying, well, here's the thing.
Okay.
When you compare it with vinyl, the kids are saying that it's cheaper and it's more portable.
That's what we said back in the 70s.
Okay.
So it's the same.
I could go all day on this, but I'll give you one story. Brockton will understand this. Brockton's our producer. He'll understand this. If you can sit in the Burger King at I-24 and 495, and you bribe your kids by feeding them Burger King, and you sit there with a pencil turning the cassette wheel because 1.5 foot of tape's out on your lap in the car.
Yeah, that's how you do it.
That was technology back then.
That's how
And
you
they
do
want to
it.
go back to that.
They want to go back to it. They're pushing their parents. The parents are going into the attic, the garage. They're trying to find the boom boxes so the kids can play the tape.
Does anybody in the control room have
No.
a turntable in their house?
No.
You do.
Oh, I don't have a turntable.
You do. You're probably playing
see.
Jay Giles' band, right, Brockton? Yeah. I mean, I got Jay Giles vinyl.
Well, the first album I ever listened to end to end was Born to Run on my sister's cassette player in her bedroom. I was not allowed to take the cassette player out of the bedroom, so I had to sit on her floor on the shag rug, teal shag rug, 75, listening to Born to Run cassette. That's how good that was.
Look at that memory.
Boom.
Oh, my first
Bringing it
vinyl
back.
was Donnie and Marie, Going Coconuts. That was my first vinyl.
I mean,
Gotta love it.
a seasoned news reporter, Donnie and Marie, Lisa Mateo.
Loved it.
All right.
There's such a gap here. It's unmentionable. I will give you one anecdote here, just because it's August and we're not. Who cares about the markets? And I'll give you one anecdote, folks. I remember sitting in the TV room with my mother, and the Beatles came on at Sullivan the first night, and my father, who was in very good shape, came up the basement stairs, not 2 steps at a time. You could tell him he was angry if it was a 3-step climb. And he came up the stairs 3 steps at a time to see who these evil people from England were.
There you go.
This is great. Lisa Mateo, thank you so much for the newspapers today. He's not from England, he's from Canada, and definitive, Brian Adams. We say good morning. PPI in 30 minutes.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr. Thank you for joining us out on YouTube, out on Apple CarPlay, on Android Auto. Paul, we begin 3 days of important economic data.
Absolutely, Tom. We're going to get some inflation data starting today, the PPI. I mean, food, energy, trade, I don't know. It's year to year up 2.6%. That would be down from the 3% last period. So the market seems to be looking for, again, continued moderating deflation.
There was a point before Donnie and Marie were even thinking about putting out their first album where PPI was structured a certain way. To this day, I haven't learned the new PPI, but Michael McKee tells me it's not the same as what we really hung on it. You know, remember this LIFO, FIFO?
Oh, yes, sir.
Back in the times of LIFO, FIFO, we really hung on business inflation. It's a little different now. It's tweaked. But we'll have that for you here in 28 minutes as well. Red and green on the screen. Dow behind because you weren't in Home Depot building a garage for your Vespa.
No, exactly not. I mean, some disappointing same-store sales there. I mean, you talk about Home Depot with negative same-store sales. That just, and the company highlighted that people are just putting off some purchases here, waiting for lower interest rates.
We don't use veneer reporter John Tucker will give us a brief on Home Depot here in a bit. He's buried today.
He's building a window or something. I don't know.
Yeah, he's doing something for Mike here at 731 Lexington as well. Let's get started right now from the Interactive Broker Studios of Bloomberg Business Flash. Here's Lisa Mateo.
And we've got green on the screen. Investors awaiting that U.S. price data for any clues on the Fed's policy path today. Yes, we're getting the first of two key inflation reports under a half hour from now. July reading on producer prices. Now, economists predicting a gain of 0.2%. Tomorrow, it's on to CPI for July. We have retail sales, weekly report on initial jobs claims, and industrial production on Thursday. We have NASDAQ futures up 0.4%, 79 points. Dow futures, little change, up 16 points. S&P futures up 0.3%, 17 points. We have the two-year yield at 3.99%, down 2 basis points. The yield on the 10-year, 3.89%. Down 1 basis point. To earnings, yes, Home Depot down nearly 2%. Cut a sales outlook. Weak housing demand due to higher interest rates. I want to check in with Lowe's as well. They're down about 1.5%. Thursday, we'll get some results from Walmart. To tech now, China's Huawei Technology is close to introducing a new chip for artificial intelligence use that could compete with NVIDIA. It plans to begin shipping as soon as October. NVIDIA shares, they're down up nearly 1%. And today is Google's annual flagship Pixel smartphone launch. Now, it actually moved the date up from October to try and get a jump on Apple's annual iPhone launch. We have Google up about 0.3%, Apple up about 0.3%. That is your Bloomberg Business Flash. Tom and Paul.
Can we have a moment of silence for right now when parents of freshmen in college are getting the first textbook guess?
Oh, boy.
Remember that?
Yeah.
What was the most you ever spent on a textbook for one of your cherubs?
Oh, my gosh. Just give me the round number.
I clocked in at $234
can't do that.
for differential equations. And the only thing I can say is cash flow got differential equations better than I did. So I guess it was worth it.
Okay, it works.
Principles of Economics, 10th edition. The giant Greg Mankiw of Harvard, his license plate is EC10, which he taught for years. 10th edition. They're giving it away for $275 this morning. And Steve Whiting knows that where Steve Whiting kills, it's not chapter 1 or chapter 2. It's like chapter 23. Nobody links the financial system and the equity markets to economics like Steve Whiting of Citi Global Wealth. He joins us right now. Steve Whiting, can you posit that nominal GDP is coming in, dampened real GDP, dampened inflation, and does that come right over to dampened revenue growth, and I've got to run from stocks?
Look, it's definitely dampening revenue growth. Whether it's dampening profits is a different story. I can't be quite so pessimistic. I mean, look, EPS growth in just the quarter past, right behind us, closing in on 11%. Spinal Tap, turn it up to 11. Not so bad for slowing nominal GDP. I mean, let's just look at last year. Really strong labor market in 2022 as well. Last year, if you took out Mag 7 companies, EPS was minus 7%. We're actually rebounding in the corporate sector. We've had a lot of restraint, and that restraint is paying off now in terms of not overproducing, not oversupplying. Yes, demand has slowed at the same time, but somehow we've slowed in a way where that caution is paying off a little bit for companies overall. Now, again, could the story be really exciting and it was minus 30, plus 30? No, it's not.
Right.
But it is firming fundamentals on the profit side.
Stephen, what do you make of the volatility we saw in the markets last week? Kind of just rewind to Monday and then the rebound in Tuesday. Was that just a one-off thing and we can now refocus on fundamentals?
Well, no, it's several things, and some of these are fundamental. So there is political uncertainty, tell me when it's over. Mm-hmm. There's geopolitical uncertainty that we've all braced for to some level. It certainly impacted markets yesterday. There is midsummer data slumps. I don't think that the July employment report was the slowest gain of the year, but there was also, again, the impact of the yen carry trade. And that was really an unsustainable amount of investment leverage. Leverage against capital, not leverage against incomes in the real economy. And we had a real de-risking event on that. But that was not the leading edge of an economic collapse. And we found the opportunity. Again, it was very strange. Inside the United States, high-flying tech stocks are the ones that came down, not industrials, not financials, not recession indicators. And so we were able last Wednesday, again, to raise our weighting for large cap U.S. stocks. There's a lot of our concerns about concentration risk and tech flying too high. I mean, the semiconductor index was off 25%. That's an opportunity.
Some news out there today. Starbucks names Brian Niccol as chairman and CEO, and he is the chairman and CEO of Chipotle, one of my favorites. Starbucks stock is higher on the news here, so that's pretty interesting there, Tom. I know you're a big fan of Chipotle and Starbucks here. Hey, Steve, so we sit back here. How do you weigh equities versus fixed income here?
Bonds got more expensive in last week's sell-off, and stocks got cheaper over the course of the last month. But certainly last week, the drop again made equities more attractive than bonds. Again, for our reallocation, where I think we're moderately overweight equities centered in the United States. We don't do it all just in high-flying tech stocks. Of course, it was just eliminating an underweight there. But what we did to finance it was to take down our weighting on long-term U.S. Treasuries. So another volatile asset. 3.9 is roughly was our guess for the end of 2024 for 10-year yields. We think that the Treasury market is now embedding a long-term Fed funds rate of about 3%. That's pretty close to what the Fed's estimate is, averaging in both recessions and recoveries. It's not zero, and we don't think it's going to zero. So the long end of the bond market is a real neutral kind of asset right now.
So, Steve, given that backdrop here, I mean, Tom's all in the Mag 7. I missed it, obviously. Now what do you do in the equity markets?
So, look, I think, you have to stay invested for economic development and growth, which is the normal course of business. We're finding profitable growth companies outside of mega caps to be particularly cheap. There are certain areas of the world where I think fundamentally not much changed in Japan. As an example, that's one little piece of a portfolio. But an idea that you could just find a couple of stocks and say, that's my allocation, we think is a mistake. If you just bought the companies that ascend to be the top 10 market caps, it takes outperformance to get there. But if you then only buy those companies, you have a portfolio that is historically underperformed even 1 year ahead over the last 3 decades.
Stephen Whiting, thank you so much with Citigroup. We've got breaking news. We've got to get to it. First, though, your news from New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Trump had a more than 2-hour chat with billionaire Elon Musk on X Spaces. The conversation was plagued by glitches, but mostly rehashed many of the themes from Trump's campaign rallies. The former president railed against illegal immigration.
These are rough people. These are people that are in jail for murder and all sorts of things. And they're releasing them into our country. And they're telling them, if you come back, we're going to kill you. We're going to give you the death penalty or kill you. So they don't want to come back.
And he touched on the economy.
The election's coming up, and the people want to hear about the economy and the fact that they can't buy groceries because they don't have enough money to buy groceries. The inflation has killed them.
Elon Musk pitched a role for himself on a commission on government spending. Trump praised the idea, calling Musk the greatest cutter. After the live stream, Kamala Harris's campaign released a statement saying Trump's campaign only cares about self-obsessed rich guys who would sell out the middle class. The U.S. believes an Iranian attack against Israel has grown even more likely. Officials say it may come as soon as this week. The Los Angeles area was rattled by a magnitude 4.4 earthquake yesterday. The epicenter was in Highland Park, north of L.A., where there was another earthquake in June. This woman was inside when the quake hit.
The lights were shaking. All of our glass doors were coming off of the walls and then hitting the walls back again. It was pretty crazy.
The earthquake rattled downtown Los Angeles, including the ESPN studios when the anchors were on air live at the time.
That's an earthquake. That's an earthquake.
Oh, wow, that is a real earthquake.
Whoa, that is a real one, guys. All right.
Whoa. That is real.
Hold on. Let's see if we're going to get worse here. Still rolling.
Hey, watch your...
Still rolling.
The earthquake was felt as far away as San Diego. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Mike LaBarre. This is Bloomberg. Tom, Paul, Lisa.
And Paul, stock market talks. Chipotle down 9%.
Yeah.
Starbucks up 10%. Something must be going on.
Something must be going on there. So Starbucks shares jumped 12% after promoting or appointing Brian Niccol as their chairman and CEO. He comes over as the chairman and CEO from Chipotle, one of my all-time favorite places. So bringing some good news to Starbucks there.
Two activists involved with Starbucks.
Sure.
I'll get to the problem Starbucks has, which everyone's living with. But I love Brian Nichols, engineering out of Miami University, Booth School, Procter & Gamble. He sold Tide, I guess. I don't know. And then he ends up at Yum Brands for a cup of coffee. And then he goes, what's your first date like at Pizza Hut? I mean, Brian Niccol, I'm sure, was, there at Pizza Hut and worked his way up through the marketing combine of America's Food, CEO of Taco Bell, CEO of Chipotle for, good 6 years. And now he's got the worst job in the morning. I mean, it is the worst job. The biggest problem with Starbucks, Lisa, help me here. It takes too long to get your order.
Oh, people are always waiting online. That's what it is.
You know,
the problem. Even if you order an app.
But the technology is perfect. The technology they have is great. It's just the volume going through these stores is unbelievable.
Volume, and it takes a while to put all these.
They
If you want the mocha lacca, whatever, with the shot of this. Or
Alex Steele has got an order that
mocha lacca.
You don't have this problem when you use Nescafe. And it's, you have the instant coffee, you put it in there, and that's it, and bip, bap, boom.
No.
But he's got a huge challenge.
Double short mocha. Now, he does, but the market's seeming to suggest that, boy, here's somebody that maybe can, get this thing. Not that they have to turn it around.
I can't
but
remember
just
when I've seen this. Stock down 9%. What'd you say, Paul? Up 12?
Up 12 for
That's a
for
21% delta?
Yeah.
Because the CEO's moving?
Yep.
Brian Niccol, congratulations.
That's right.
Leading there, at least his favorite, Starbucks. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures right now pointing to a higher open. This is after Asian stocks recoup their losses from last week's rout. Right now we have NASDAQ futures up 0.6%, 118 points. Dow futures up 0.1%, 56 points. S&P futures up 0.4%, or 22 points. We have the 2-year yield at 4.00%. That's down 1 basis point. The yield on the 10-year 3.89%, and that is little change. We have Japan's Nikkei up nearly 3.5%. European stocks struggling for some traction now with the Stock 600 erased its early advance. Travel, leisure shares leading declines right now. Stock 600 is little changed. Currencies, the British pound gained after data showed UK unemployment unexpectedly fell in the second quarter. We're checking with the Japanese yen as well. That is down about 0.1% at 147.48 against the dollar. Companies making news. Johnson & Johnson reportedly closer to settling those lawsuits filed by thousands of people who claim that its baby powder gave them cancer. So sources say more than 3/4 of the plaintiffs signed off on a $6.5 billion settlement. Their shares are little changed. And you heard it here. Starbucks named that new CEO. The company appointed Chipotle's chief Brian Niccol its next leader. He'll start September 9th.
Very cool.
Yes, Starbucks shares higher on the news, up 10%. Chipotle down 9%. Yes.
Does this mean I get a margarita at Starbucks?
That would be amazing. I wish. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Seriously, there's activist shareholders involved. People are just fed up with Starbucks. I still go back to the order time as well. This is a joy, and this is part of my ute from long ago and far away. It was such an honor to go up the elevators at 60 State Street in Boston with Philip Carre. He knew my father, blah, blah, blah. And he was a giant of value investing. And John Kerry took over the mantle at the Pioneer Fund, and it permeated the valueness of Boston investment. And of course, that went over to Eaton Vance, where it was taking advantage of municipal bonds, and they invented tax savviness. And you end up with Fortress Gorman taking out Eaton Vance, which is how Aaron Dunn is sitting here. Co-head of value equity, Morgan Stanley, but with that heritage of value. What was it like working at Pioneer, where a PE multiple over 12 was rich?
Yeah, it was actually wonderful as an analyst when I was at Pioneer. John Kerry's a legend. Still see John today.
You still see John Kerry? Send him my kindest
I will.
regards.
He's an amazing person, great investor, and really learned a lot from John.
Bring what you were weaned on, and I don't Eaton Vance, maybe value equity or even value muni, but bring the sense of value now that you were steeped in out of Arkansas. You can tell by it sounds like
how he gets to Boston. I have no idea what that story was.
But bring it over to the idiot valuations today, where Walmart's a 30 multiple. What's going on?
It's very hard. I mean, it's a challenging market, I think, in general, to make heads and tails of Mag 7 or Mag 6, whatever we want to call it today, and the rest of the market. If you really backed out those top 6 stocks, I think you would see that growth and value are actually pretty close in performance. I mean, we've done the measurement. So really, the rest of the market, I think, looks quite interesting. And we're not super negative, the market. I think we've seen a technical correction in terms of the yen carry trade, et cetera. And you always see dislocation when you see rates move as much as they did. So we are what we would term as opportunistic value. We're always looking for, and I think, harking back to John Kerry and that type of value investing is good businesses. We want to start with what are essentially good industries, good businesses. So highly cyclical, think of the airlines, right? Like those are tough businesses for us to own. We just don't dabble in those very often. So it's more of, let's start with the industry, let's start with the business. What earns good returns? Who doesn't overlever the balance sheet? We want to protect our clients' capital in the downturn. And then we look for where there's management change. And actually, we were talking a lot this morning about Chipotle and Starbucks. The reason there's a big change is because management matters. And when you take a company, we spend a lot of time. We're an 8-person team, great investment team that looks for opportunities where there's maybe a new CEO, a new management team, and that's what we're looking to invest in. So maybe they're under-earning. Maybe there's a lot that a new management can do in that business to make it even better. So we really want to mitigate the downside as much as possible through great businesses. And I think if you look historically, we do that, right? We don't carry a lot of cash. We're fully invested for our clients, but we really own good businesses. Let's start with there. And we want to manage the risk reward for our clients. So we're looking for where do we not have much downside, and we think there's a lot of upside.
How do you guys define value?
Yeah, so that's we look at intrinsic value. That's the basis for everything. And I think when you look at the market today, we really PEs, multiples are all shortcuts to intrinsic value, okay? And so we really focus on intrinsic value and centering ourselves on that. And that really saves us from a lot of troubles in markets where we, where you question how something can be so highly valued, or the early 2000s. So centering yourself on intrinsic value is really the basis for that. Multiples, in my opinion, are really shorthand, and you have to know why something trades a certain multiple, whether it be growth, margins, whatever that is. That, to me, is all embedded in intrinsic value. So that's how we look at it.
What's the biggest trap in analyzing free cash flow? If you line up 10 companies, not all free cash flows equal, is it?
Yeah, I mean, cyclicality, I think, is the big one, right? So when you look at more cyclical businesses and in value investors, we typically do. So obviously there's the obvious ones like working capital release, et cetera. We try to back out of that and see what ongoing free cash flow generation looks like. But also, I think from a cyclical perspective, what is mid-cycle free cash flow generation versus peak and trough, right? So we have to really spend a lot of time doing that.
This is like Graham Dodd and Cotto.
I know.
This is just too much.
It's Boston. So how an Arkansas dude gets to Boston, I have no idea. I know there's a story there.
How'd you get there? What?
I took a trip through Texas. Made my way up to Boston. Yeah, started working at Pioneer back in 2008. Actually.
Did you have to buy a Brooks Brothers suit to interview with Pioneer? I mean, you're down on Newbury Street.
Yes, exactly.
Moves the buttons.
Exactly.
You got a name on your list that Tom and I definitely love to talk about. Emerson Electric. Mm-hmm. That seems like it would be right in your wheelhouse. Why is that a name that's on your list?
Yeah, there's a couple things here. So, I think when we look at, we're about to probably enter some sort of global easing cycle, right? So, rates have been moving up across the globe. You saw the UK take a cut at their short-term rates. Australia did the same. The US is pricing that in. So we do think there's a little bit of a global easing cycle coming. So we're a little more interested as long-term investors looking at more cyclical sort of companies. Emerson is interesting because, you had a long-time CEO depart the company.
Okay.
I think embedded in what was going on at the company was a lot of costs that needed to come out. Some simplification of the business structure, some flattening of that. And so that excites us. That's one of those situations, like we were just talking about management previously, is a new CEO that can really change it. Now, they're also simplifying the business through selling some of their businesses, like the incinerator and stuff that they own.
Yep.
Really simplifying that into automation.
Okay.
Yeah.
This is really critical. I mean, we're running out of time, but on Emerson, for years, it just underperformed.
Exactly.
They show the guy the door.
Yeah.
How do you find out that the pixie dust is different? You go make a visit?
Yes, we spend a lot of time on the road with companies. I mean, that is exactly what we do. We know our companies well. You've got to go see them.
Paulson was adamant about this.
You've got to see them. You've got to know the people you're investing in, right, to run the companies. And we value that extremely highly. We like to go see the companies at their offices, mostly because you can learn a lot from going to a company's office and seeing how much they spend on art and stuff.
Aaron Dunn, Morgan Stanley Investment Management, thank you so much. We did a historical walk through Boston Money Fund, but to be clear here, Aaron Dunn with Morgan Stanley Investment Management, thank you. So can you come back?
Yeah.
Can you?
Absolutely.
We should go up.
We
could do a power lunch with Aaron Dunn at Lockover's.
Oh, nice.
All
right, I can do that.
Under the portrait my grandmother would let me see years ago. Aaron Dunn, thank you so much.
Stuff.
Greatly appreciate it. Serious discussion there on value in this time of the Mag 7. Emerson Electric up 9% over the last 10 years per year. That's just not good enough. But what a launch from the pandemic on Emerson Electric, 60 to 150. Green on the screen, even the Dow up 40 points. S&P futures up 20. From New York City, Paul Sweeney and Tom Keene. This is Bloomberg Surveillance. Good morning. PPI next.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are just moments away from the Producer Price Index. While we wait for it, I want to check in with Starbucks right now, up about 13%. It announced Chipotle's chief Brian Nichols is going to be its next leader. We have Chipotle, that is down about 8%. And of course, check in with Home Depot. They're down about 1% after it's cut its sales outlook. PPI numbers coming in. Tom, what's standing out to you?
Yeah, just as I thought, I said to Paul as you were starting in, Lisa, that it's like the market got a front run on this. The market was red and green on the screen.
Yes.
And about 5 minutes ago lifted, and you see it, folks, with disinflation in place. Paul, I'm going to let you go through it, but it's just simple. Year over year, ex food and energy, 2.6%, came in at 2.4%. Here come the revisions right now, and they're somewhat, they're
mixed.
Mixed, yeah, that would be the right word. What do you see, Paul?
Yeah, so Tom, the PPI ex food and energy year over year came in at 2.4%. The consensus was for 2.6%, so a little bit cooler there. Yeah. And remember, last period, Tom, was 3%. So that disinflation that the market has been thinking about discounting seems to be playing on a little bit.
The VIX. 19.
Oh, there you go. Finally, we got it below 20.
We're below 20 on the VIX. That's a better number, a more quiescent number, less fear out there. Futures up 0.6%, up 33. NASDAQ up 0.8%. The level, Dow futures, this is comical, 39,600 on Dow futures as well. In the yield space, 3.97%. Yields come in a solid 4 basis points on the 2-year. The real yield, wow, 1.76%. That's down from a 182 just 2 cups of overpriced Starbucks ago. What's Starbucks up as well?
Starbucks up about 12% here, 14%. So the stocks really move. It's rare, and you called this out earlier, Tom, that you see a stock move so dramatically on just with a management change here, bringing a CEO. But
Chipotle minus 9.
Yep, that tells you everything you need to know.
Starbucks, let's say plus 12.
Yep.
Is a 21 point gap.
Yep. That's a lot of value assigned to one individual. So good for him and good for Starbucks.
Well, it seems to be a real doer. Out of Miami University Engineering, he's got to engineer a turnaround with activist pressure at Starbucks. Folks, actually, when we quote PPI, Paul and I have no idea what we're talking about.
Nope.
McKee's in my ear telling me what to do. But the reason we're doing it is to give Sarah House time to digest the numbers, senior economist at Wells Fargo, an expert on this. Sarah House, does this PPI set confirm disinflation in place?
I think it confirms that we are seeing that disinflationary trend still underway. So we did see, I think, some improvement in terms of the headline and the traditional core. Although if you look at what we refer to as the core in the PPI, so that strips out, in addition to food and energy, trade services, which are measured in margins, that did come in a little bit firmer than expected, which I think is consistent with slowing inflation, but it's a gradual slowing.
So there's a summary for you, and the summary and the support we get on economic indicators, always with Commonwealth. Our economic indicators with Sarah House today, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to Commonwealth.
Sarah, what do you think the Federal Reserve, how do you think the Federal Reserve will kind of look at these numbers this morning in totality?
Yeah, so I think they'll be digging into the details in terms of what specifically feeds into the PCE measure. So I think like economists and like a lot of market participants, getting a lot more dialed into the granularity of the PCE and CPI combo, what it means for the Fed's preferred inflation measure. But I think they'll be looking at a number that still seems like it's consistent with the first quarter's flare up in inflation being just that, a flare up, and again, not really derailing the disinflationary trend that started last year.
So give us your thoughts here, Sarah, about this economy here. I think a lot of folks are concerned that the Fed is too late in cutting rates, and that the risk of inflation, recession, are really there, and maybe the Fed's not recognizing them. How do you think about that?
Yeah, so when I look at the labor market data, and this isn't just about the July jobs report, that we got a little over a week ago, but really the array of jobs market data, which shows that not only are conditions softening, but they're really back to where they were in kind of pre-pandemic, in some cases even mid-2010s. I think that you are seeing that downward momentum is concerning, and I think the recession risks have risen. But the good news is that the Fed has room to dial back the level of restrictiveness that we're seeing, and I don't think a recession is a foregone conclusion. But the Fed needs to get going in order to support the labor market, especially given that I think we've seen that disinflationary trend in place and no longer as much of a concern.
Let's get up to CPI tomorrow then, Sarah House. I mean, you've got a model on an Excel spreadsheet, one part real GDP and one part your measure of inflation equals nominal GDP. Let's go through each part right now. Where are you forward on real GDP 12 months?
Yeah, so we're looking for real GDP to slow, so probably somewhere closer to 1.5%, 2% over the next 12 months. And I think that is consistent with the slowdown that we're seeing in the jobs market, what that means for consumer income. But with inflation slowing too, that does mean that.
So what's your inflation number that you're overlaying on a 1.5 to 2, 1.75% center tendency?
Yeah, so when you're looking at core PCE, probably somewhere right around 2%, maybe 2.25%. So further progress, not quite all the way back to the Fed's 2% target, but we think against the labor market, good enough as far as the Fed's concerned.
This is critical. So you're talking about modeling a center tendency sub 4% nominal GDP.
Roughly 4%, yeah, given that inflation's probably going to be a little bit above.
I'm just trying to make some news here. It's a slow day here. Sarah House, Wells Fargo with us. Sarah, what are we going to see tomorrow with the CPI at 8:30?
Yeah, so we're looking for a 0.2% increase on both the headline and the core. So that's in line with the consensus. But I think the details are going to be really important. So to what extent are we still seeing outright goods deflation? And are we seeing more progress on the services side, both in housing, but also the non-housing services that have been such a concern for the Fed?
So, Sarah, I mean, I guess, one of the issues here is the consumer. We're also going to hear from the consumer later this week. How's the U.S. consumer out there from your perspective?
Yeah, so the U.S. consumer is hanging in there, but we do think that households are increasingly constrained in their spending. So credit is more expensive, harder to get. So we're seeing less use of it. At the same time, not as much of that excess savings from the pandemic. And so it really comes down to the jobs market, and there with slower job growth, slower nominal wage growth, that means slower income growth as well.
Right.
And so we think that's where you get that slowdown in consumer spending, is consumers just don't have as much to fall back on. And so they're getting more cautious as a result, but you still have positive real income gains. And so that's keeping overall spending in positive territory.
Sarah, fold in your work, economics, into the Wells Fargo yield guess. And where I want to go, I mean, I can go 10-year nominal, but I'm going to go the 10-year inflation-adjusted yield. It's in 2 beeps. It's in 5 beeps over 2 cups of Starbucks black coffee, 1.77%. How much down can real yields come when you model in a maybe 4% nominal GDP?
Well, I think if you continue to see the improvement on the inflation side, they can come in a little bit more. And I think especially if you get the Fed cutting, which we think that they'll actually cut pretty aggressively here in the rest of the year. So there's probably still some room to go, but we're not going back to the pre-pandemic days by any means. So we think that Fed easing is going to be more recalibration and not a move to accommodativeness.
Thanks so much. Greatly appreciate that. Sarah House with us, with Wells Fargo, their senior economist. Melody Hobson, one of my favorite people over on the Death Star, interviewing. And she's on the board of Starbucks. And again, Howard Schultz is still involved. Let's be clear here. He hasn't retired.
No.
He met with Mr. Nickel last week. And then Melody goes on to say, Starbucks CEO decision, not about, quote, outside forces. Are you kidding me?
I don't know. I mean, I still go in there for the double short mocha. I don't know. I think they're expanding their offerings. I don't know. I think the whole mobile thing has been a challenge for them because, as Lisa was mentioning earlier, some of these drinks that these people order, like Alex Steele, by the way, I'll throw her under the bus. Her orders are crazy complex.
Lisa, what's your order? Come on.
I just get a cup of black coffee.
No.
That's all I get.
That's
all I want.
That's all I want is a cup of black coffee.
We'll have Alex Steele come in and conjugate her order, But
does it still? I haven't been in ages. Does it still taste like Charbucks?
No, it tastes good. That's my favorite. Yes, it's nice and strong.
Michael Barr, you ever been in a Starbucks?
No, too busy drinking my Postum. And
Postum.
Yeah.
Boy,
in a styrofoam
you're bringing it way back. That's pre-Sanka.
Yeah.
And Nescafe's in Europe. There's a lot of Nescafe, and it's frankly, it's good.
I watched my father, dissolve that stuff.
It's a Swiss thing.
Exactly.
Okay.
We'll see. Starbucks, nice move today.
Do you not realize that 99.9% of our audience has no clue what Postum is?
Postum? Even I don't. I'm not there.
I don't know.
You have to
Postum?
be from the Midwest. My mother had a bottle that was 5 years old with mold on it in there, and she'd have her Postum. Right now, futures advance off PPI and maybe off a little bit of Chipotle to Starbucks enthusiasm, up 33. With our news in New York City, Postum's favorite, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Middle East remains on edge today as Israel braces for a strike from Iran and/or its proxies. It's no longer a question of if Iran will directly strike Iran, but when. Israel's defense minister says the country has boosted its defensive and offensive readiness. Iran has threatened for days to retaliate after the assassination last month of a Hamas leader while on a visit to Tehran. White House National Security spokesman John Kirby.
We share the same concerns and expectations that our Israeli counterparts have with respect to potential timing here. Could be this week. We're continuing to watch it very, very closely, and it is difficult to ascertain at this particular time if there is an attack by Iran and or its proxies, what that could look like. But we have to be prepared for what could be a significant set of attacks.
White House National Security spokesman John Kirby's comments come as a U.S. carrier strike group and guided missile submarine head to the region in a bid to deter hostilities. Former President Trump and billionaire Elon Musk talked about the assassination attempt and deportations during a chat on X. Trump casted his rival Democratic presidential candidate Kamala Harris as liberal and attacking Jewish people who support her, repeating his claims that have been widely called anti-Semitic.
If you're a Jewish person or if you believe in Israel, if you're a person that, is very pro-Israel, if you vote for her, it's worse than Biden.
The stream on X was plagued with technical glitches. Musk blamed the 40-minute delay on a cyber attack. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. All right, Tom, on behalf of Lisa Mateo, myself, and our entire audience, here's what we got on Postum. Postum is a powdered, roasted green beverage popular as a coffee substitute. The caffeine-free beverage was created by Post cereal company founder C.W. Post in 1895
caffeine-free?
and marketed as a healthier alternative to coffee. That never made it to Brooklyn or New Jersey. Did it? No, it did not.
Caffeine-free, what's the point?
What's the point, Michael?
Man, that's like, non-alcoholic beer, I guess.
Right.
It's the same thing. And,
It was painful.
Then there's instant post. Oh, my God.
there was instant Postum, yeah.
Instant Postum. Oh, my God.
Do you see why our ratings are so good in Nebraska?
Yeah, in Nebraska, they love us.
You go out of Lincoln, folks, in Omaha. You drive west on I-80, and you get to Cozad. And there's a diner in Cozad, Nebraska, Michael Barr, still serving Postum. It's out there somewhere.
That's my home.
Good morning, Cozad, Nebraska, with the loneliest and best gas station in America. You are on fumes when you drive into Cozad, driving out west. Futures up 30, Dow futures up 103, up 0.9% on the NASDAQ from New York City. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing after U.S. producer prices increased by less than forecast in July. Now, the producer price index for final demand increased 0.1% from a month earlier. Compared with a year ago, PPI rose 2.2%. Now, when you take food and energy out of the picture, it was unchanged in July from the prior month. Core PPI, that rose 2.4% from a year ago. Tomorrow, we move on to CPI. So we have NASDAQ futures up 0.8%, 147 points. Dow futures up 0.2%, 90 points. S&P futures up 0.5% or 27 points. We have the 2-year yield at 3.97%, down 4 basis points. The yield on the 10-year 3.88%, and that's down 2 basis points. Companies making news, General Motors, they say it's been laying off staff in China, planning a larger structural overhaul of its operations there. Their shares down about 0.2%. And Samsung's largest union, well, they say they're going on strike August 15th to the 18th. Shares up nearly 1% in South Korea. And I have to check back in with Starbucks again after it named Chipotle's chief Brian Niccol its new CEO and chairman. We have Starbucks. They're up about nearly 13% right now. We have Chipotle down 7%. That is your Bloomberg Business Flash. Tom and Paul.
My Lisa Mateo reverence just went through the roof here. You go in and order a black coffee at Starbucks?
That's it. You know why? Because I don't have to wait on the line. They give it to me right at the counter.
Can't you walk across the street to the deli and get it for 1/10 the price?
No.
It doesn't taste the
black
same.
coffee.
Really?
Yeah.
Yes.
And the black coffee is, it's reasonable. I mean, given the rent and
it's not too
labor
bad.
and all that.
Yes.
But the other ones.
The other ones are
the
expensive.
kids are popping $5-6
I
in
know.
there.
It comes off of my app.
Yes,
She's taking it off of my app.
Very good. Futures up 26, NASDAQ up 0.8%. Bloomberg Surveillance this morning brought to you by Interactive Brokers, their bond marketplace. Thank you, Interactive Brokers. Access their vast selection of over 1 million global fixed income securities, no markups, no built-in spreads, and low transparent commissions. Okay, we got to do this. Timothy Tosca's entered the room on alternatives, which means illiquid, and he is with Damas? Who is Damas? I think there's confusion on that. What does Damas do?
Damas is a fund administrator for private equity funds and alternatives to private markets, one of the largest global players.
So you keep score for who of alternative investments?
So really real assets, private credit, and I'm the sector head for private equity. So some of the largest private equity shops we handle the fund administration for globally as they launch new SPVs around the world and do their books and records.
Asking for all of global Wall Street. Right now, how illiquid is private equity, and what are the pressures to monetize or liquefy 5-year, 7-year, 9-year investments?
Sure. So it's obviously an illiquid strategy. So liquidity has been an issue over the past few years for investors. The typical time horizon for a private equity fund is usually for hold investments 5 to 7 years on average. So when you look at for a fund life, that's closer to 10 to 12 years. But over the last couple of years, really starting since 2023, there's been a considerable slowdown in exits. So there's been an increased desire by investors for the managers to start picking up the pace of exits and get that liquidity to go back and reinvest in newer vintages. So it's been a bit more liquid the last 2 years than the past. But
I would say, when I was out there doing this stuff, I could sling your deals out all the time. If you could be a market that's up 15%, I'd get any deal out the door in the IPO market. What is going on out there for these private equity guys? They just don't want to take a markdown. They don't want to take a mark. They need to grow up and say, the market's different. We had a pandemic, everybody. The valuations are different. Let's get this stuff out the door.
Yeah, we're starting to see that now. Buyers and sellers to come off the seats, get off the sidelines and do that. You're absolutely right. I think the valuation gap between the buyers and sellers were pretty significant. No one wanted to kind of give in to the other in terms of just, I'm holding on to an asset.
Okay,
I believe it's worth more.
To the chase. It's in August. They're out in the Hamptons. Everybody's living large. Reality starts about September 15th. In private equity, frankly private debt, but in private equity, or frankly in CRE, what's going to happen to alternatives on September 15th?
We're going to see, I think, there's been a continuation here in the second half of the year, especially in Q2, an increase of deal volume and deal value, really. The IPO market, still not where it should be, but trade exits, they make up over 50% of the deal activity, and secondary buyouts, meaning selling to other private equity firms, are taking the other side of it, which I see Paul laughing, but that's making up the bulk of the deal activity. So we have been seeing a lot of that exit starting to occur in the last few months, especially.
Where are we in that? Going back to that down round, for a private equity fund to go public or to sell for a lower valuation, that was never, thought of when you were raising all the money and investing the money. But for many deals, that is the new reality. But maybe if the stock trades up in the aftermarket, everything's okay. What's the mindset in private equity about maybe taking that kind of discount to get liquidity?
Yeah, it's difficult. It's a cost benefit in terms of that. There's clearly value to cash today, right? So liquidity for investors, pension funds, large endowments, see that cash flow. There needs to be maybe reinvestment to the public markets, to other alternatives. So that is that cost benefit. It's difficult because when you're a manager and it's been a difficult fundraising market, are you ready to show some kind of realization or partial realization going into the publics at a lower markup, especially when they truly believe there's still additional value to come out? So we're starting to see different opportunities on the secondary side.
I can't say enough, folks, about how Altardamus is in the absolute sweet spot globally of being the bean counters and managing and administration of this song and dance. Paul and I have seen this dance before, and at some point the market clears. How much of a discount do you anticipate on a blended basis once some, most, or all of these investments clear? Do you have a working number in your head?
Yeah, no, it's difficult to kind of come up with that just because, again, it's a new normal here, right? So, again, when we look at the last 10 years, most of the, I don't want to say the most recent funds, but they haven't really worked in this environment of a higher interest rate.
Really?
It's silly to, hard to believe, right?
Exclusive, folks. Surveillance breaks exclusive.
Higher interest rates, yeah.
Paul's been on top of this way more than me. This hasn't worked.
Right.
What happens in September?
I still think we're going to see kind of a new normal again in terms of just this, the increase of the deal activity. So I think September comes around, as you pointed out. Folks might be on vacation, a little bit of a slowdown summer, that's natural. Yep. But what we've seen from our clients and just the level of activity, creation of vehicles, and just discussions, they're all ramping up for a strong second half and really very bullish in terms of what they see in activity going into 2025.
How about raising new capital? Can they still raise new capital here?
Yeah, I mean, I think there's still significant appetite. The liquidity constraint aside, but why is there a constraint, or why is that an issue now? It's because there's still a demand. These type of, the typical investor for private equity funds has historically been an institutional investor, so pensions and endowments, and they love the consistency of those long-term kind of consistent returns. There's a place in their portfolio for that. Now they need that cash flow to reinvest it, and again, I'll be bit biased here. I've been in private equity and specifically the last 15 plus years, but they're flexible. In these time of markets, good or bad, good managers that add value to companies, there's always, value for that. So
Tim, thank you. Tim Tosca with us with Altardamus here. What do you think, Paul? I'm sorry, in September, something's got to give here.
Yeah,
I just don't understand it.
I'm shocked that we haven't had a more robust IPO market, secondary equity market, exits for these private equity folks.
But the exits, they've got to, you nailed it, they have to take a loss.
In many cases, yes. Because again, these guys can only raise capital if they've deployed the capital that they've already raised. And where you make money is not necessarily deploying the capital, but raising the capital and getting the fees on more capital.
Really.
So you got to put it to work. You got to get.
It's amazing. What's Starbucks doing here? Talk about.
I forgot this. The Starbucks CEO who has been replaced was only there 1 year. So obviously the board found out pretty quickly that person wasn't the right person.
Yeah.
So they bring in the guy from Chipotle, which if you talk to the Michael Halens of the world who follow these restaurants, he's gotten it done at Chipotle.
Yeah, yes, he's done that to say the least. Futures up 31. Stay with us. There's CPI tomorrow, retail sales on Thursday. The markets lift off PPI disinflation. Mike Campbell, Tom Petty.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. It's Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. The 9 o'clock hour. Need to get the markets open, and they lift. Futures up 35. Why do we go up, Paul? PPI, or was it S-Bucks?
Yeah, exactly. Starbucks, my double short mocha, is the drink of choice here. But Tom, we got the markets up 0.6%. I'm just looking at the Ian Lingham note you forwarded to me, calling out that PPI data coming in, a little bit tamer than expected, maybe giving the Fed some more ammunition to be maybe a little bit more accommodative as we get to September.
Learning process. Lisa, listen to this. Logan, thank you for this. Out on YouTube live chat. We're out on Instagram now selling YouTube. Subscribe to Bloomberg Podcasts. Logan did. Vanilla syrup and oat milk creamer. You've got an $8 latte for a quarter of the price. So he's at home doing vanilla syrup and oat milk creamer.
There you go.
To equate to is a latte really $8 at Starbucks?
I don't know. The inflation is brutal. I just put my phone up there and they zap it. It's all good.
It does. You have Logan actually saying on the YouTube chat that it's easier and cheaper to make it for yourself at home, Lisa. So do that. Thank you. I know it is. I have the Starbucks pods. I kind of do that too.
Okay. Is oat milk healthy for you? We had a huge argument at home of almond milk.
Almond
Just
milk,
get
yes,
regular
yes.
whole
Do you have
milk.
almond milk?
I don't
Get
use
it from
any
the cow.
milk. You get it from the cow. You
Exactly.
can do regular milk, do the lactate if you're lactose
Okay.
intolerant.
Omar Aguilar is going, what in God's name are they talking about? Futures up 31, the VIX under 20, that's key. Again, the VIX under 20, 19.79. With our Bloomberg Business Flash, drinking a black coffee, Lisa Mateo.
Straight up, that's how we do it. Futures getting a lift. This is U.S. producer prices rose in July less than expected. A quick breakdown: services costs decreased 0.2%. Prices of goods climbed about 0.6%, the most since February, and that was led by a pickup in gasoline costs. Now tomorrow, on to the next inflation report. The consumer price index expected to show a modest increase in data. So we have NASDAQ futures up nearly 1%. 168 points. Dow futures up 0.2%, 103 points. S&P futures up about 0.5%, 31 points. The 2-year yield at 3.97%, down 4 basis points. A yield on the 10-year, 3.87%, and that's down 3 basis points. To earnings we go. Home Depot, well, it started to show that its shares were down 3% when we started this morning. Now it's down to nearly 1%. Cut its sales outlook, weak housing demand due to higher interest rates. Checking with Lowe's, their shares are little changed. Thursday, we're going to hear from Walmart, so we'll wait and see on that. But it's Starbucks really moving the markets. It named Chipotle CEO its new leader. So we have Starbucks. That's up about 14%. Chipotle's down about 7%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks a lot, Lisa. Jody Laurie's going to join us here in a bit, in 12 minutes. And she's expert on Starbucks because out of Philadelphia at Bryn Mawr, there's 1, 2, 3, 4 Starbucks.
Yeah.
Just to get from the Whole Foods out to Bryn Mawr. There's 4 Starbucks to choose from. Jody will be with us.
Yeah, she's great.
Right now, Omar Aguilar with us, with Charles Schwab, really on these equity markets as well. Omar, I got a VIX under 20. What does that signal?
Well, that's the signal is that I think the scare growth that we had a week ago, it seems to be relaxing a little bit. Most investors, I think we saw a big spike in the VIX, one that we hadn't seen in a long time. And a lot of that is just putting everybody on a concern, not just on the correction of equity markets, but just overall the health of the economy. And then we started to talk again about potential recession and probabilities of a recession and, the potential for the Fed to intervene. So it just shows that the VIX is a great example on how the market behavior expresses themselves in terms of whether it's a risk off or risk on market.
So, Omar, what did you take away from that price action we saw, last week, that violent kind of Monday trading session, and then kind of finding some footing for the remainder of the week? What did you make of all that?
Well, a few things. Over many years, we have discussed about this carry trade, and we also discussed the fact that sentiment in the market was incredibly complacent. And when you combine those two, history tells us that at some point you're going to have something that will have to just get a little correction. Quite honestly, what we observed a week ago is just a small bump that we just observe, and in certain way, a little healthier for what you would like the market to have. So the unwinding of some of these big trades, and usually they tend to be related to either short-term or long-term momentum. This was a really long-term momentum of a trade that has put in place for a long time. And I think when you put those into context, having some of that unwinding is actually healthy for markets. It is painful because nobody wants to take the medicine when you get those big, inflated trades. But certainly, it is good to see that it was orderly. And I think that was the key, Paul, that, we saw an orderly unwinding of the trade, as opposed to something that was more of a panic.
So where are you suggesting, or where? Let's go the other way. At Charles Schwab, where are you seeing your investors placing their money these days? Because nobody's got a view of the U.S. retail investor better than Charles Schwab.
Yeah, our clients, continue to watch. I think the natural confidence level has gone down to what it was at the beginning of the year, where the majority of investors were incredibly optimistic about markets, very risk-on oriented. And as time went by, with the concentration on the Mag 7, as well as just overall just the questions about the economy, I think things are starting to just become more neutral. Right now it is really about, what do you do with your cash and redeployment of cash, with the understanding that the Fed will probably reduce rates over the course of the next few months. It is that reinvestment risk that we continue to work with our clients with, is, how do you extend duration and where do you actually put your money, which right. is, critical now, especially because, we lost an opportunity before the events of last week.
Have the Mag 7 become value stocks? I mean, I get, Omar, that they're less growthy, but how less growthy are they?
Well, a big part of the definition of growth and value is really more about, your free cash flow projection, Tom. And I think, in general, the interesting thing about the Mag 7 and a lot of those mega caps is that they became the stable stocks for the last 5 years. And what that is, like, if you remember, most of those used to be more like the typical cyclical value stocks were like the stability, and the more speculative stocks were more these high growth, high PE names. What is different this cycle, because of the strength of their balance sheets, is that they provide EPS growth and margin projections that are actually attractive through their free cash flow, but at the same time they have this stability on their balance sheet that allows them to just be safe. So it's not necessarily the question of growth or value, but more as a result of what is the role of their strategy in their portfolio.
Omar, one final question. I got futures, granted it's futures, not the pricing, here in 20 minutes. At 5,400, where do you reprice your visibility 1 year out on S&P 500? Are you the same as you were 10 days ago, or have you marked it down?
No, we actually, move the around a little bit because of the expectation of, how fast the Fed will reduce rate. I think our views is just that the speed of the disinflation and the slowdown of the economic growth is going to have an impact on earnings going forward. And therefore, that revision will probably take our numbers down, maybe for a few percentage points just a year out.
Omar, thank you so much. Omar Aguilar and Charles Schwab here on the equity markets. Futures up 32. The key news for me is VIX now, just as Omar's talking.
Yeah.
Into 19.80. That's almost a stick in. I mean, there's something percolating out there. Paul, you got to believe they're getting ahead of CPI tomorrow.
Getting ahead of CPI tomorrow is right, Tom. So the concern or the issue here and the debate here is, where is inflation tomorrow? We'll get CPI ex-food and energy looking to come in, maybe 3.2% on an annualized rate. That's down from 3.3% last period. So again, the expectation is a continued moderation of inflation here, and it's, I guess, this last 100 basis points a little bit stickier than what we've seen.
Futures up 33. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Just a chat is how billionaire Elon Musk described a sit-down interview with Donald Trump on his social media platform X. However, the live broadcast kicked off with problems. Technical issues delayed the interview for more than 40 minutes. Musk blamed a so-called denial of service attack, a kind of cyber attack that floods a server with traffic to force it offline.
This massive attack illustrates there's a lot of opposition to people just hearing what President Trump has to say.
Once the chat started, Trump says America's enemies don't find President Biden intimidating.
Iran would not be attacking, believe me. You know, when I was there, and I say it with respect, because I think we would have been good with Iran. I don't want to do anything bad to Iran, but they knew not to mess around.
Musk called for a government commission to ensure that taxpayer money is spent effectively and pitched himself for a role in that effort. Trump praised the idea, calling Musk the greatest cutter. The U.S. believes an Iranian attack against Israel has grown even more likely and may come as soon as this week. White House spokesman John Kirby says the U.S. and its allies have to be prepared for what could be a significant set of attacks. Bloomberg's Rosalind Matheson.
Well, that's right. It's interesting, in fact, because we're now, 2 weeks since the killing that Iran, blames on Israel of the Hamas leader in Tehran, and yet there's been no retaliation, even though every single day Iran has said we're going to have to retaliate.
Bloomberg's Rosalind Matheson. Ukraine's top military commander says his forces now control almost 390 square miles of Russia's neighboring Kursk region. Russian President Vladimir Putin promised a strong response. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, stealing from our YouTube live chat, thank you guys for a really smart discussion. Is the first order condition for Starbucks to franchise like McDonald's? I mean, they've always wanted to be in control, but they start, they do it 10 stores at a time.
I don't know, it seems like Starbucks is everywhere it wants to be with its owned and operated stores. So that's kind of been their strategy, I guess.
It's been their strategy.
But I learned a lot about the McDonald's story just from the movie Founder on, I can't remember which streaming service is on, but you kind of learned about kind of how McDonald's came about, and it's not about owning the restaurant business; it's about owning real estate.
I mean, Starbucks, to be fair, had a bruising pandemic. There's no other way to put it. But free cash flow has gone nowhere. They had $3.2 billion free cash flow in 2019. And here we are on to 2024, and the FA screen on the Bloomberg terminals got me flat. Yeah, that's totally unacceptable.
No. So, but a lot of investment in the stores, a lot of investment in kind of reconfiguring some of these stores. But I don't know. I still think the experience is good. I still think the retail experience is pleasant. The stores, by and large, are really high quality, I think. I love my one on Route 35 in Wall Township. They love us there. I don't know what, and it seems like they're everywhere. So I'm not sure what the growth story is. I guess maybe international growth. So we'll have to see what this new management team here has to say.
You got to stay with us. Excuse me, on Apple CarPlay, Android Auto, on YouTube, subscribe there to Bloomberg Podcasts. We have an esteemed guest coming up on Starbucks.
Big.
When you enter Bryn Mawr, they have Coffee 101 for freshmen. It's like part of orientation. It's like holistic Costa Rican coffee and all that. Jody Leary coming up, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks on the rise, bond yields falling. This is after the latest inflation reading reinforced those bets that the Fed will be able to lay down an interest rate cut in September. Right now, we have NASDAQ futures up 0.8%, 160 points. Dow futures up 0.1%, 61 points. We have S&P futures up 0.5% or 28 points. The two-year yield at 3.96%. That's down 5 basis points. The yield on the 10-year 3.86%. That's down 4 basis points. To currencies, the dollar weaker, Japanese yen stronger at 147.15 against the dollar. The euro stronger, British pound stronger as well. Bitcoin up about 0.1% at 58,000. Job cuts begun at Paramount Global. The company has begun laying off its staff this morning after the company said last week it planned to slash 15% of its U.S.-based workforce. And then sources saying General Motors began laying off staff in China. It's planning this larger structural overhaul of its operations there. Their shares were down about 0.2%. That is your Bloomberg Business Flash.
Just as we got to get to Jody, but I'm sorry. Is this our August and September? Every company coming out tweaking.
Sure.
I mean, it's just got to be.
Well, in the media space, I mean, they're taking write-downs, multi-billion-dollar write-downs on their traditional linear media businesses.
One of the great institutions on the East Coast is Bryn Mawr. Superb academics. Back to, I think, my grandparents. It's in Marion. It's outside Philadelphia. It's just a spectacular mainline liberal arts school. But the major thing at Marion, and this is perfect for Jody Lurie because she's never stepped at a Starbucks in her life.
No,
if you're at Bryn Mawr, I mean, you go to Uncommon. You can go fancy La Colombe if you have a trust fund, but you go to Uncommon, where the coffee's hand-picked and hand-grown. And
of course,
it's not corporate.
No.
So why don't you bring in Jody Lurie here on a Starbucks? She's never walked in the door once in her life.
Exactly. Jody Lurie, she's a credit analyst at Bloomberg Intelligence. She follows all the consumer sectors like lodging and restaurants and games, all the fun stuff. But she's our expert here when we talk about what's happening here in the world with Starbucks and Chipotle. Boy, Jody, what do you make of this news here that Starbucks is replacing the CEO, this Lakshman Narasimhan, that they hired just a year ago? Now they're bringing in a player, I think, Brian Niccol, the CEO of Chipotle. What do you make of this?
I think that is a very interesting question, Paul. I mean, I think you bring up a lot of good points. First of all, Tom, I just want to clear the air. I have been to the Starbucks quite a few times. That said, I was at La Colombe yesterday. So I mean, I think there's a couple of points here. Starbucks has had a beating over the last few years. They made it through the pandemic. They started generating pretty strong free cash flows. And then all of a sudden they had the union issues. And that took a lot of headline risk. It took a lot of tempo out of the company. Then you combine that with the AstroTurf movement for the Middle East related issues that brought out a lot of their customers from their traditional stores.
Right.
Follow that by China, which was sort of their growth avenue. I mean, China is what, Lakshman kind of hanged his hat on. And to have China sort of pull back, not necessarily have that strong performance that we anticipated, it's kind of taking the air out of the tires.
I mean, I'm looking at the weighted average cost of capital. Folks, on the Bloomberg, you can do this SBUX equity, WACC, and I'd say it's not heavily debt encumbered. It's got 22% debt all in now. There are activist shareholders involved. Jody Lurie, what do they want?
We are still sort of trying to figure it out, but usually when there's activists, investor involved, you don't really think that's a good thing for bondholders. The company worked really hard to get leverage down to 3 times and actually below 3 times. But now the expectations are that leverage is going to hit at 3.4, 3.5 times by the end of their fiscal year, which ends September. And that's partially because of margins. But I think we do have that sense that that $20 billion that they plan to give back to shareholders over the next few years, it might get ratcheted up, or they might get more aggressive in other ways, or they might look to spinoffs. I mean, who knows what's on the table? All we know is that there might be a potential additional board member from Elliott Management. There might be all sorts of changes from that stable sort of cash generating Starbucks that we know.
So Jody, just looking at the EBITDA line, close to $9 billion of EBITDA in 2023. In 2024, that's going down. I'm looking at the FA screen again, down to about 7.3, back up to $8 billion in 2025. What's going on there? Why isn't the profitability better there? What's going on?
It really comes down to China. I mean, it comes down to China. It comes down to Middle East. They really, as I said, the AstroTurf campaign against them in terms of their perceived sort of support of Israel, and the fact that they've now had a lot of customers sort of just decide not to go because of that.
Right.
It's been tremendous. But then you now have China where they've really expanded a lot of their stores and they haven't necessarily gotten that growth. That said, I mean, I think the other sort of key point is something that we talked about. This was not the most recent quarter, but the quarter before that, is those sort of occasional Starbucks goers. So the people that go at 2 to 4 o'clock in the afternoon just to grab a coffee, you might not be seeing that as much. And people don't have the same cash.
Jody Lurie, thank you so much. Jody Lurie with Bloomberg Intelligence on Starbucks. Perfectly timed now. He started out as an analyst at Starbucks going with his kids. $8 for a latte. David Rubenstein joins us now with a modest acquaintance with the Baltimore Orioles and also, of course, with Carlyle Group. David, I got lots of cute baseball questions, but there's so much going on. From your perspective, I have to ask about the unwind of private equity, and that everyone's talking about we need to liquefy, we need to cash out of private equity. How urgent into the autumn of this year is it for private equity to find an exit?
Well, I don't think it's quite that dramatic a problem. Private equity's been around for a while. It's taken longer to sell assets than it normally does. But as interest rates come down, almost certainly they'll come down in September, I think it'll make it easier because the gap between buyers and sellers will, I think, be reduced, and buyers can afford to buy things more readily than they could when higher interest rates were part of the situation. So I think private equity is okay. I wouldn't cry for private equity. I think that private credit has also grown very large and become a very important part of the private investment world, but private equity is still a very important part of the global investment scene, and I don't think it's going to change very much.
You mentioned private credit, David. For a lot of our listeners, that's been something, a new asset class that's become very large, maybe over the last 10 years or so. Give us your views of the private credit market and how that fits into the capital markets overall.
Well, for those who aren't familiar with it, for most times when you wanted to borrow money for a business acquisition, you go to a bank or something like a bank. But in recent years, people have been going to institutions like private equity firms which built their own private credit businesses. And these are basically institutions which are lending money the way banks did, but without some of the regulatory constraints. And obviously the banks aren't as happy about it because the private credit people aren't as regulated as banks. And the reason for that is the banks have FDIC deposit money, whereas the private credit people are lending money that is not FDIC insured. But there haven't been very many defaults generally, and I think the private credit business has grown to be as large, if not larger, than the private equity business. It's a very large and very profitable business if you know what you're doing.
June 21st, Orioles rout Yankees for a 22nd straight winner tie in AL East. It's been wonderful. What's the key distinction between the Rubenstein Orioles and the Yankees, the dreaded Yankees? What's the difference between Oriole ball at Camden Yards and what we see, this travesty in the Bronx?
Well, the Orioles and the Yankees have been jockeying for first place in the American League East for most of the season. They both have excellent teams. We'll just have to see who does well in September and the remainder of August. But I think both of those teams are likely to be in the playoffs, in my view. Yankees have some extraordinary players, and the Orioles have some extraordinary players.
Their ability to lose to the Chicago White Sox, I don't know if your team has briefed you, but the White Sox snuck by the Yankees last night. That would never happen to the Baltimore Orioles.
Well, we've lost some games that I didn't think we would lose, but on the whole, I would say the Orioles and the Yankees are really in good shape for the playoffs, and I don't know who's going to win, but I hope the Orioles do, of course.
David Rubenstein.
Still one of the best stadiums
Orioles
in the game.
Oh, it is. Yeah.
It's unbelievable.
I was honored to interview the architect who saved Camden Yards, and then she went up and really saved
standing the test of time.
I would just like to invite you to come to the Orioles games whenever you'd like. And
thank you.
And then when the Orioles come to play in New York, let me know if you want to come to those games, too.
Perfect.
There we go.
Perfect.
See how we set that up? Perfect. David Rubenstein.
All right.
Thank you
very much.
so much.
Innocently walked past our studio. No. He's coming in.
No,
We're going to put him to work.
Serious brief there on private equity and his support of it. He is with Carlyle Group and a baseball team in Baltimore. Futures up 35. Please stay with us. We need to get the markets open. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the market's going to react after U.S. producer prices increased by less than forecast in July? Producer price index for final demand increased 0.1% from a month earlier compared with a year ago. PPI rose 2.2%. Let's get to the numbers right now as they start to come in. We have the S&P 500 up 0.6%, 34 points at 5,378. We have the Dow up 0.3%, 141 points, 39,505. The Nasdaq up 0.9%, 164 points, 16,944. The 2-year yield at 3.95%, down 6 basis points. The yield on the 10-year 3.85%. That's down 5 basis points. Commodities, oil falling after rising for 5 days. Right now we have Brent crude $81 a barrel, WTI crude $79 a barrel. Checking in with the gold. We have spot gold lower, $2,467 $1.67 an ounce. And at the open, yes, let's check in with Starbucks after a change in its leadership. Those shares up 17%. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. We're open right now. Dow up 147 points. VIX under 20. 19.92. Usually with Barry Ritholtz, we get right to it, talk about the markets and all the mistakes I'm making in the markets. But instead, of course, Masters in Business is the conversation. We'll talk about that. But there was a charming photo out of the celebration of his Ritholtz Wealth Management. What's the formal? Help me,
That's
Barry.
it. Ritholtz Wealth Management.
I guess
That's exactly
right. Ritholtz Wealth Management. And it's four thugs around a grill that looks like when you turn it on, the LNG plant dims out on Long Island.
That's right.
How big is that grill? It's like ginormous.
Just your run-of-the-mill Lynx backyard grill that you hardwire to the gas line, so you're not replacing
your neighbor's gas line.
Right. No. By the way, watching them install the gas line is amazing. They use this torpedo and shoot it 50 yards underground. The technology is really fascinating. But, I was listening to the Home Depot earnings today, and all I can think of was, well, of course everybody's coming up short. 20, 21, 22, 23 people spent an outrageous amount of money building decks, building grills,
that needed a
adding media rooms, adding this, because everybody was stuck at home. It reminded me of the Y2K build out, where everybody was shocked in March 2000 that Intel and Dell said, hey, we're going to come up short. Well, yeah, you pull 5 years worth of growth forward. And that's exactly what happened here.
So there with tepid revenue, maybe we have tepid nominal GDP. Do you adjust stock portfolios? What do you do to tweak or to manage the nervousness of a certain character, a kind of slowdown?
So there's a lot of moving parts here. Let's take it apart. First, I love the PPI report today because core PPI, if you look at all the different measures of inflation, that is the leading inflation indicator. Core PPI is going to tell you what's going to eventually be pushed out to consumer prices. And when you have, essentially zero, that tells us the Fed is behind the curve. Any chance of September being off the table is now dead and buried.
Okay.
And I'm sure, if we haven't looked at it yet, but if I look at it, I'm going to bet that the odds of August tick up ever so slightly. So now the Fed goes from 2 or 3 quarters behind the curve to 4 or 5 quarters behind the curve. And their risk is to the downside, that they may allow a recession to happen when snatched defeat from the jaws of victory, totally avoidable. But to bring this back to equities, you enjoy the upside when everybody was overspending in 21, 22, 23. All right, now they have to figure out a new way to sell more junk to the American consumer, and Home Depot's pretty good at figuring that out.
Yep.
Stuff gets old, stuff wears out, will drop to a more normal spending limit. That doesn't mean we're sliding into a recession. It just means our rate of growth is slowing, and the days of 13, 14, 15% annual gains in the S&P, maybe we should temper our expectations and be prepared for 7, 8, 9% gains.
So is our Federal Reserve, have they in fact engineered a soft landing? Are we landing softly now as we speak?
They still have the ability to crash the plane into the side of the mountain.
Okay.
And if you look at their history, they're very good at that. They are perennially late to the table. They were late to recognize inflation spiked. They were late to begin raising. They were late to recognize that inflation peaked. They were late to recognize that inflation has been defeated. Do you remember the piece I wrote a year ago in Business Week? Jerome Powell should stick his flag and declare victory and take the rest of the year off. He should be done raising rates, and he should start thinking about cutting rates. That was a year ago. That's how far behind they are. They are not very good at reading their own models and their own data.
Right.
And the risk now is elevated rates, reduced supply, high credit card debt. They are stressing the bottom half of the consumer scale and risking a potential recession. I'm not in the recession camp, but hey, if these guys continue to dawdle, they may accidentally tip us into a recession.
Creative destruction, maybe a little Clay Christensen. May he rest in peace. Wonderful, wonderful guy on what we do with disruption Or maybe it's Hayek where you clear the markets, but the theory here can come over to a cup of coffee. One of your clients comes in today and says, load the boat on Starbucks. You got activist shareholders. You got a new CEO coming in. When do you know to buy a story stock like Starbucks?
So the trader in me looks at things when they go too far to one extreme or another. But I haven't been on a trading desk in 20 years, and our clients are not looking for next Tuesday. They're looking for 20, 30 years from now. So when I see the Starbucks story, they really peed me off during the pandemic when they wiped out everybody's Starbucks points. And it was it stood such in stark contrast. The same day I got the email from Starbucks, hey, sorry, these points we told you never expire, you got 30 days to use them or they're wiped out. I got an email the same day from Delta. Don't worry about your medallion status. Don't worry about everything is extended. We're here for you when you're ready to start flying. Give us a call. And it was such a stark exercise in corporate relations with their clients and investors. So I kind of have shrugged off Starbucks. I don't boycott them or anything. I just don't care. They're so last decade. Who the new CEO is, what happens to the stock.
No, I'm with Barry on
Could
this.
not care
opinion,
less.
Yeah.
They had their moment. They're now McDonald's for coffee, and I'm pretty much done with them. So that's my bias. I could not possibly care less about a company than I care about Starbucks.
But how do you really feel?
No better sound bites than
just like, come on. I don't understand the thinking when everybody is freaked out. We're stuck in our houses. Who cares about the points? It's a rounding error. Your biggest expense is labor and rent, not the cost of a macchiata.
A what?
A caramel macchiata. On the other hand, when you see the sort of approach a company, and it wasn't just Delta, but there were other companies that said, hey, this lockdown is a disaster. What can we do to win the hearts and minds of our clients? One day this will end. How do we move forward? So, hey, all great things come to an end. GE is a husk of what it once was. And I think Starbucks is now facing competition from local cafes. People don't want McCoffee anymore. They want something a little more genuine. And Starbucks, I don't know if you could tell, they've lost me as a customer. So I do a good job hiding that. But I just don't care who the CEO is.
I got a listed 120 calories, $6.75.
Sure.
For a caramel macchiato.
Yeah, why not?
Which is...
Skip the Starbucks, buy the S&P 500 index, you're way ahead of yourself.
Flash crash 8-9 days ago. Here we're back. The VIX is 19.48, Dow up 186 points. What's the lesson Barry Ritholtz experienced is taken from the last 8 days?
It's the same lesson that we've seen over and over and over again, whether it was the Asian contagion, the long-term capital management, the dot-com collapse, the financial crisis, the pandemic crash. You know, the U.S. stock market is undefeated. Anytime markets are cut in half, you want to be a buyer. Anytime the VIX spikes up to 50, you want to be a buyer. You have to be prepared to suffer a little bit of pain and be a little early.
Okay, cut to the chase. We've got to go here. Bar's screaming. But the bottom line is you want to listen to Masters in Business.
For sure.
And watch Bloomberg Surveillance 5 days a week on YouTube, so you have the psychological foundation to step in with a VIX of 55.
You have to understand that when things get attractive and everybody is panicking, how many people have said, buy when there's blood in the street? You know, I buy when everybody's selling. Buffett, when the tide goes out, you see. But understanding that intellectually is very different than being able to execute that emotionally. People freeze when they should be hungry and excited. I love a good market crash. It's a great opportunity for capital to return to its rightful investors and for savvy investors to step in.
Barry Ritholtz, thank you so much. Masters in Business.
He should have a podcast.
He should have a podcast. Or two.
Okay.
Yeah, or two. Yep. Dow up 193 points. Barry Ritholtz, thank you so much. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Trump and billionaire Elon Musk talked about the assassination attempt and deportations during a chat on X plagued with technical glitches. The start of the chat was delayed for 40 minutes. Trump went on to say, once it began, that he was going back to Butler, Pennsylvania, where his life was threatened.
We're going to
Great.
go back in October. We're all set up, and the people are fantastic in Butler. It's a great area. These are incredible people.
Trump also commented on Musk saying, "I need somebody that has a lot of strength and courage and smarts." The FBI says it is investigating efforts to hack both the Harris and Trump campaigns. Bloomberg's Ed Baxter has the story.
The GOP says hackers attempted to get into Roger Stone, a former Trump advisor's account. The Harris campaign says some Harris staffers were targets. The Washington Post first reported the attempts. The Harris campaign itself says it does not appear to be a victim. It says the campaign vigilantly monitors and protects against cyber threats and that it is not aware of any security breaches. The Trump campaign hasn't responded directly. Ed Baxter, Bloomberg Radio.
President Biden and First Lady Dr. Jill Biden will attend a cancer moonshot event in New Orleans today. 2 years ago, the Biden administration relaunched the Cancer Moonshot Initiative with two main goals: one, to prevent 4 million cancer deaths by 2047, and to improve the experience of people touched by cancer. Last week, the Department of Health and Human Services awarded nearly $9 million to improve access to cancer screenings in underserved communities to further those goals. The U.S. believes an Iranian attack against Israel has grown even more likely. The White House says it may come as soon as this week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Paul Lisa.
Is Starbucks a Dow component?
Dude, it's up 21.5% here. I mean, what is going on? I'm going to blame Lisa Mateo here.
I mean, Home
this is a
Depot
coffee
was
company.
weak, and we had red on the screen in the Dow up 222 points now, 39,600 in the Dow.
I mean, this is a company, Tom, it's a $100 billion market cap company. It's not a micro cap.
Yeah.
Stock's up 21% on a management chain.
Right.
Actually, I'm not sure I can remember the last time that's happened.
Quickly, John Tucker with us. We mentioned WCBS here, 10 days out now. Will be darkened as an iconic piece. No one knows that at Bloomberg better than John Tucker as well. John, were you surprised that we can't do two news stations?
No,
with
I
20
mean,
million
economically,
people?
it's just not feasible economically. And remember, their parent is basically in bankruptcy. But,
Yeah.
you know.
I took them public.
Here's my gripe. All the writers writing about this, New York Times, is that these are all people who were outside of New York City writing about this, taking the business angle. It's really a personal kind of
Yes.
thing because
Radio is
all the good news, all the bad news since we were kids was delivered by WCBS, always with a firm hand on the tiller, the people navigating through that. And they were like, it's like a death in the family. It is a death in the family.
It's really, really challenging. We'll have much more on this over the next 10 days. WCBS 880 they'll continue with the Mets. That's what I've been told. They're going to continue to follow and do the New York Mets. The Dow up 223 points. Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks on the rise with the NASDAQ leading the charge up more than 1%, 220 points at 17,000. We have the Dow up 0.6%, 266 points at 39,625. The S&P 500 up 0.9%, 52 points at 5,396. The two-year yield at 3.96%. That's down 5 basis points. The yield on the 10-year 3.87%, and that's down 3 basis points. To commodities, we have spot gold higher, $2,473 an ounce. We have Brent crude, $81 a barrel. WTI crude, $79 a barrel. To earnings we go. Home Depot shares up about 0.5% after lowering its forecast of a key sales metric for the year. And then you have NVIDIA leading the gains in mega caps right now, up more than 3.5%. And yes, Starbucks up 20% after appointing a new chief. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. As we had David Rubenstein in here talking about private equity, we're going to do private credit right now. In structured finance, this is Wall Street, blah, 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 for fancy debt discussions where you need a double major from MIT in electrical engineering and management science somehow to survive. Ali Melli joins us right now. Ali Melli joins us. Montechill, very chill. Montechill Capital Partners joins us right now. Where are the shadows in your world? Where is the leverage buildup? Where is the debt that's unknowable right now?
I think there are a couple of areas where we are seeing the buildup of leverage. Maybe not so close to our particular world at Montechill, but one area of stress that I actually see as a more of a macro parameter is the basis between the Treasury versus the swap curve. And it is becoming widest it has been on the record. If you look at the USSW function on your Bloomberg, it's essentially was around started last year around 30 basis points, now is around 44 basis points. And that's a metric of how much essentially it costs to hold treasuries versus swapping that treasuries over a 10-year period. That's, to me, is a metric of essentially scarcity of repo capacity, and it has been moving one direction over the past
So
year.
are you seeing stresses in the short-term paper market that no one is talking about?
Essentially, it's a link to both because it's being financed by short-term paper, but really, like people are buying 10-year treasuries, repoing in the short term, and hedging the interest rate component. And that basis, that's the infamous treasury basis trade. That is moving wider and wider. And that, to me, signals that the big question that we have, which is, if deficit is at 7% of GDP, where is the demand for that excess supply of treasuries? It used to be the Fed, but now Fed is trying to at least keep the size of its balance sheet steady. So there is going to be essentially, someone needs to make room for buying that extra supply of treasuries.
All right, so let's just go to leverage in the system here. Used to be when I want to do a big LBO or an acquisition, I'd go to Jamie Dimon, he'd lend me new money. Now I gotta come talk to guys like you in the private credit business. Talk to us about, I don't know, is that a risk in the system that I'm going away from a regulated banking system to private credit?
Well, I'm going to be biased there. I think it's actually risk reducing for the system to some extent, because when you go to the bank, it was that, well, you have FDIC insurance and you're relying on people's deposit. And there are a couple of components. First of all, if there are losses in the banks, we experienced during the financial crisis, everyone would say, well, you really cannot let people have losses because if these people go under, it's the depositor that's going to be impacted. So to some extent, the regulators have done a great job by moving that away from the banking sector where people have their deposits, putting into private capital and saying, well, now if you guys made bad credit decisions, your investors might lose.
Are there stresses in your world versus David Rubenstein's world? We just talked about private equity. I got the usual, he's confident in the workout of it. A lot of other people are screaming for exit in private equity. Does the same thing happen in private credit and structured notes?
Not yet, but you can see some of that being built up in the sense that the spreads have compressed quite a lot over the last year. Like after Silicon Valley Bank, you could look at, for example, CLO BB paper. Spreads went really wide, now they are coming back, and you wonder if you are putting capital to work today, are you getting compensated for the risk?
Where are you guys seeing opportunity in that private credit business today? It seems like deal activity is picking up, I guess, a little bit, but where are you seeing activity?
Sure. Our particular flavor of private credit is more on structured and consumer finance papers, so asset-backed consumer.
Okay.
We are seeing that as banks are having their own stress with respect to their balance sheet, for example, it's much harder for them to sell their commercial real estate-backed paper, whether it's multifamily, office obviously has its own story.
Right.
They are also like reducing, for example, the supply of credit that they are making available to car dealership, auto finance. So some of those consumer asset classes that used to get financing from the banks now are a little bit homeless and orphan, and then that opens room for people like us who do asset-backed private credit.
Asset-backed private credit. So are we seeing risk building in that market? A lot of folks economists are talking about higher default rates for consumer debt, car loans, things like that. What are you seeing in the business?
There is definitely higher default, but there is also more for sellers and more opportunity in this space because there are people. There used to be a home for that. Now some of those places, some of those assets are homeless, and you kind of need to build that.
40 seconds. Your take on office buildings across this nation. Have we bottomed?
I think they are not all the same in some. I don't think we have bottomed yet, especially in VRC asset class, smaller areas, etc. But if A class, probably we have bottomed.
Ali, thank you so much. Ali Meller with us here on structured credit and debt. It's something we don't talk enough about, but it's important for
it's huge.
Global
All the money's
Wall
going
Street.
there.
He's chill, monochill. I got it, monochill.
Like if I were a young,
Thank you for having me.
A young banker on the street, I'd be going to private credit. Well, what do you? That's where the money's going.
Yeah,
back in the day, you'd come to me and I'd do you a loan from the Chase Manhattan Bank, and we'd charge you a reasonable fee, and I'd syndicate my risk away.
A reasonable fee.
Yes.
Okay, a reasonable fee.
Yes, exactly.
Those were the days.
And then I'd syndicate my risk all off. And great.
And that
come back and do it again.
That party's over.
Now these guys are coming in, taking the
Ali Melly, thank you so much. Greatly appreciate it. Paul, we got to look at Starbucks here. I mean, this is really
crazy.
Something. I haven't even had time to. I'm so buried I'm in Instagram.
Oh, I know. You're a social media maven. You and Lisa Mateo.
2-day chart. Starbucks up 24%.
Yeah.
2-day. That's a full 2-day chart. Up 25%. And what's the symbol for Chipotle? Margarita? CMG.
Yeah.
Equity.
No bueno.
GIP. Yeah. John Tucker, is he going to be with you in the 10 o'clock hour?
Occasionally, I mean.
Down 11%. So let's short it here. 11 and 24. I've never seen this, folks. That's a 35% delta.
Yeah, I haven't seen it.
11 plus 24.
I mean,
never have I seen that.
I mean, what does it say about the outgoing CEO? But it's a good day for the activist investors in Starbucks. These are the days they live for. They buy a little bit of stock, or maybe more than a little bit of stock. They angle for a board seat. Maybe they get one, maybe they don't. But they angle for change, and they're in many cases agents of change. And here's this is a textbook example of an activist investor coming here and saying we need some change, whether it's change in management, change in strategy, change in capital structure. Yeah. Here's a management change, and boy, it paid off for them.
It's great to have Jody Lurie to talk about the debt side of it, 22% debt. Yep. It's not like, I'm afraid to look. Where's Warner Brothers?
Oh, please.
Discovery.
Yeah, you don't want to look at that.
Let me look at the 2-day chart on that. Went under 6.65. It's back up now.
But they have the real challenge with Warner Brothers Discovery. There's many of them, but one of them is the balance sheet. $41 billion of debt here.
Right.
$9 billion of EBITDA. So that's 4 times net debt to EBITDA. That's higher than you want to be.
It's gonna be eventful to say the least. Again, Dow up 154, NASDAQ up 1.3% off a disinflationary PPI. I'm saying that as a generalization. Really exciting. Tomorrow, CPI and then on to retail sales to keep it going. John Tucker came in, he had a tantrum today. He said, I'm sick and tired of the David Gura bluegrass stuff. Can you play some real music? This is for John Tucker.
You should have seen